We are going to switch screens. Okay. All right. So. I have a question for you. This is regarding your trading. Do you want to be right or do you want to be effective? I want you to think about that for a moment, okay? I want you to go, what does he mean by, do I want to be right? Of course I want to be right. Of course I want to win. Of course I want to be able to make prediction. But what if your desire to be right gets in the way of your being effective? And not being effective, what happens is you no longer perform well, and you're no longer having the edge that you need psychologically to drive your method edge. What if that's happening? Okay? The truth is, the vast majority of traders are stuck here. They want to be right, and they're resistant to anything that tells them they may not be right. They want to be a winner. They want to be focused. They want that. But in doing that, they become insular, and they can't see that it's not about winning and losing that's so important. It's about the effectiveness of performance. Do you want to be right? Do you want to be effective? Ultimately, this is really a game where you have to give up the illusion of control over outcome. It's not there. People who say, I want to be able to win 70, 80% of my trades, when you look at them, they're not making any money. They're making their brokers wealthy, but not them. The problem is it's not about winning. It's about performing. It's about knowing how to lose incredibly well and knowing how to stay the course when things are going your way. It's not about, I'm going to make it. It's not going against me. A trade's not going against me. A trade's just doing what it's doing. The truth is your job is to perform, just maintain a mind that allows you to literally plan your trade and then trade your plan. How many people do you know that go, yeah, I've got the plan and I know that I'm supposed to trade my plan, but I get into the trade and just things start happening and I don't trade my plan. Well, the reason is that you're focused on outcome. You're focused on trying to be right rather than trying to focus on the one thing that you really, truly can control, the mind you bring into the moment of performance. Interestingly, when I do seminars and I ask a simple question, what are you thinking about while you're trading? 66% of the people will say, two-thirds of the people will say, I'm thinking about winning. My view is, why would you be focused and thinking about something you can't control? It's not like there's magic where you're going to think and train your subconscious to will the markets to land your way. No, that's not going to happen, friends. That's new age stuff. What I'm saying is that what you have is you have a methodology, if you've been studying trading for a while, that has an edge in the markets. The problem is the mindset you bring is focused on winning, which is impossible. So you don't have the psychology edge that you need to drive the method edge. That's what we're talking about here. Ultimately, your self-preservation gets in the way of your becoming a winning trader. Ultimately, you need to redefine what winning and losing in trading is. Winning, as long as you want to control the outcome, predict the outcome, winning is going to be elusive to you. However, if you begin to look at it going, how well did I perform? How well did I maintain emotional sobriety and maintain a trading mind all the way through this process? What if you actually check says, yes, that's winning, okay? It's not whether or not you won the trade, landed on the right side of probability, or lost the trade, landed on the wrong side of probability. It was probability in the first place, okay? However, what was not probability was the mind that you brought into trading. Most people bring in a mind that is going to fail them when they're trading because it is focused on winning and losing. If you develop a mind about probability, what you're doing is just saying, what I can control is the mind that I bring into the moment of performance. Friends, that's everything. When you do that, you discover that the psychology lines up because you can control the mind you bring into a moment. You can't control the outcome of trade. So you begin to say, how do I do that? The first thing is you start recognizing that emotional ignorance just isn't going to work at all. You need to become emotional literate. With emotional intelligence, you need to start recognizing, okay, I cannot have freedom from emotion. But what I can do, if I work with this, I can train my brain and my mind to have freedom of emotion. I can't control the uncertainty that happens in trading. And uncertainty is linked to confusion, and then confusion is linked to fight flight. That's where all the problem is. However, that's by genetic predisposition. What you can do, thank God, is that you can retrain the brain so that when it engages uncertainty, it no longer triggers to fight flight. It triggers to discipline and partiality. It takes a lot of work. It takes retraining the way the emotions are organized around uncertainty. You start developing a trading mind as opposed to a winning mind. This can be done, friends. It's about literally recognizing that I have to take responsibility, okay, for the mind that I bring into the moment. Sitting here and trying to avoid having to be responsible for the mind, saying, there's I need another toy, I need another tool, I need another skill, another teacher, another this. That's not really what the problem is. The problem is you need to learn how to use emotions to create a mind that can perform in the midst of uncertainty and risk. It can be done, friends. You learn to regulate the emotions. You learn to rebuild the emotions that are associated with uncertainty so that it doesn't trigger to fight flight. That's all that, what was I thinking? What was I doing? But rather, it triggers to discipline and partiality. You calm fears, you nurture that part of yourself. You soothe yourself rather than beat yourself up. You acknowledge there's a power struggle going on inside your head the moment that you engage uncertainty. But what you decide is, instead of ignoring that internal struggle, trying to push it away, trying to silence it, what you decide to do is turn toward it from a much stronger position, though. You choose the emotional programs to engage the struggle that create the mind that engages that struggle of, the thing is all that ambiguity that happens. Instead of like self-doubt, what you're going to have as a consequence is humble confidence, okay? That you can perform in the moment and you let go of winning and losing. If you want to learn more, go to our website. Start reading the article that's associated with this and come to the program, come to the webinar that's associated with this. Really learn what you're going to need to do if you really want to become a consistently profitable trader. Not one that talks the game, but one who walks the game, man. That's an actual player. The one who has learned how to mold the emotions that respond to uncertainty. Come and learn, friends. Come and learn. It's not just about trading either. It's what you discover is what you're learning in trading about how to maintain the mind that engages uncertainty. What you discover is that impacts the rest of your life too. Come and learn, friends. Come to the website. Learn more. Take care and have a great new year.
Wow. I don't know if you guys ever, like, some of you guys are probably new to my session. And like, I always like to start my sessions off with some mindset, like similar to Kim. But this is usually my go-to guy, as far as trading goes, as far as like understanding concepts behind mindset, discipline, patience, precision when it comes to trading. This I'll definitely send you guys this link. I just randomly picked this one too, but it was a really, really good topic. Really, really good topic. I'm actually gonna have to rewatch this one because I didn't watch this one ahead of time. So I'm gonna drop this in the Zoom chat. And this he is Randy Howell. Randy Howell is he's a trading coach, and what he does is basically he talks through he coaches for traders. He's a mindset coach for traders, and I would definitely recommend that you guys follow him and you know, watch a couple of his videos. I want to turn my camera on and see if I can get everybody else to do it. I ain't seen y'all this year yet. So I just want to say hey.
Hey, Corey.
Turn mine on right quick. See y'all real quick. What's going on? Hey everybody.
Hi.
Only got 3 people.
Hey, Corey.
How you doing? Hey Paula, how you doing? How y'all doing, man? This is my first call of the year, so
What's up, Corey?
what's up, man? What's going on?
I've been waiting since last year.
What's going on? What's going on, bro? What you up to, man? Where you headed to, Devin?
I'm driving. I'm about to start doing a little evening lift.
Okay.
Yes, sir.
All right, man. I might do a little something at the house, man. Maybe this week, have y'all come over and do some little training. So
Hey, let me know. We down for it, man. Whatever.
I'll keep y'all posted. I gotta see what the wife feel like being bothered with.
Where you live at?
Atlanta.
Yes, sir.
Yeah.
That would be great, man. Looking forward to that.
Yeah, I gotta see what the wife say. What's up, Mom?
What's up, man?
What's up, Ma? How you doing?
Yo,
Good
what's
to see
up, D?
What's up, Ray? I see you over there. How many people is this their first time hopping on? Who's the first time person?
I got my
Me.
Today.
Me, man.
Okay.
First time.
All right. So
My background's a bit noisy because I've got my 17-month-old baby trying to moan at me. But it's actually my second time on your session. The first time I actually got cut off because I couldn't find my battery.
That's all right. That's all right.
Hi.
That's all right. What's up, troublemaker? What's up, Miss Tate? You muted. I can't hear you.
Is you?
What's
It's
going
all
on?
about you.
What's going on?
Glad to have you back.
I'm here. I'm back, and I'm back. Yeah, I'm back for now.
I was on a session last night till 4 o'clock in the morning. Can you believe it?
Who session?
She sure was.
Who session?
It was Jamel and Nicole.
Oh, okay. Okay.
And,
How your legs feel? You was sitting at that computer all that time?
All that time.
See, if Miss Tate be showing out on y'all, if y'all ain't working as hard as Miss Tate, then y'all ain't doing enough.
Hey, she was singing to us all night, as a matter of fact. Singing all night long.
Miss
Yeah,
Tate,
we were singing.
Yep, jamming.
We're jamming on.
The standard. I don't know if y'all know this, man. Like she go in, she work harder than a lot of y'all. And I'm calling all y'all out. If y'all ain't working harder than Miss Tate,
don't say
Tate, y'all better get on whatever plan she on, because
don't say that.
Tate shows up for all the calls. Miss Tate take all the notes. Miss Tate ask all the questions. And if she don't know it, guess what? She gonna send a message to me. She gonna send a message to her daughter. Her daughter gonna send a message to me, and we gonna get the answer to it.
That's right. Yep. Hell, got my tablet right here, ready to write.
Look at that. Yep. Y'all need to take some lessons from her. But if you guys have any questions, this is how I like to usually start it. Like if you guys have any questions already, I usually like you guys to drop those into the chat, and then don't matter what it is, I want you to drop it in the chat. So take like
My question
5 minutes.
can be
Write it in the chat. Write it in the chat. So Nicole, you just said trend line and fib trading. Can you be a little more specific? What specific do you want to know about trend lines, and what specific do you want to know about fib trading? Same thing, Christian.
So Kiara and Nelson seem to have this fib and or trend line entries trading down pat. And I remember Kiara saying she learned a lot of stuff from you.
Mhm.
I don't think Nelson said that, but I know Nelson trades with you a lot. So I'm just trying to get better at that.
Okay.
Like it seems like there's no real one strategy, obviously, to trade in, but they know when to turn which one on and off.
Okay. All right. Let me get these questions. We don't need this to be bold. What time frame do you look for patterns? Let's see what it shows. Okay. Recognizing patterns and what occurs after those patterns. I'll probably ask for a little clarity on that one. Do you still trade using Oanda trading with? Or can you share your experience and thoughts? Okay, that's from Robin. Yeah, let me do that too. So Robin, Tasha, Tina, oops. Okay. And then Nicole asked about China, so we'll keep that. And then we got Robin, we got Anna. She has a few fib questions. Par says, me too, studying fibs and trend line. Elizabeth, how to copy and paste trade signals with mental stop loss from demo. We can go to that. And then, let's see. This is here. And then this is from Elizabeth. And then let's see. Ellen says, mom having issues knowing, recognizing when to enter a trade. Okay. Undo. I'm having issues. Okay. Don't know what to put mental stop loss. That's also from Elizabeth. Fib extensions when trading new information. Okay. Wow, you guys got a lot of questions. A lot of questions. That's
You've
good.
been gone too long. It was building up.
Hey, Corey, welcome back, man.
What up, man? That's a lot of questions. How you use field for sniper injuries? Okay, I think we asked that already. Sam, I like that, Christine. Paul, best way to save some profits when trading a very volatile pair. Okay, good question, Paul. That is a good question. What I'm gonna do too is I'll share the link out to you guys once this is uploading, and then the text of the YouTube, I'll put the questions in the description so you can kind of know the flow of when and how they were answered, so you don't have to watch the whole thing. Getting out of trades before pullbacks. That's a good question, Nicole. Wow, wow, wow. Yeah, y'all been saving. Y'all been saving up, huh? You guys have been saving up. Gabriel says, where can you find the chart with the lot sizes from different brokers? Still needing help with MetaTrader on the computer. Okay. Okay. Indeed. All right. That's from Gabriel. What's going on, bro? How is it over there in Seattle, man? Y'all, it's raining over there right now?
Yeah, man. That was my dad actually asking that question.
Oh, okay.
But yeah, it's pretty rainy over here, man.
Wanted to ask about reading trading books. Can they confuse you to lose you? Interesting question. Interesting question, Sam. Definitely gonna have to have a different conversation for that, but definitely a good question. You asked me. My question is more mental. Montgomery says, how do you push yourself to stay up watching a trade when you still have to work? How do you not let or beat yourself up when the trade doesn't go your way? You stay and analyze how to trade revenge trade. Cool beans. We can talk about that. We can talk about that. Alrighty. Okay. So I think I got everybody questions. We end up having 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 questions. Okay. All the questions are like from some random different topics, which is gonna be cool. So I think we'll just go in order. So some stuff will probably kind of be a little offsetting because some of the stuff kind of go together. So let me turn my camera off and let's get a chart up on the screen.
Sorry.
Let's get a chart up on the screen. So I'm gonna go to the back testing chart.
Hold on, just one moment.
And we are going to use a blank chart. We're not going to touch indices, but let's go to let's use EA. All right. We're going to turn off all of the indicators. So the first question was Valentina, and she asked, "How do you get the best entry before or during Kim's signals, aka sniper entries?" Right. So that has a lot to do with understanding the directional bias of the market, right? So if you're looking at this chart right now, right? Um, you can start from the 4 hour daily time frame or whatnot, right? And you have your markups. Let's just drop a couple lines. You know, we'll drop a couple lines or whatnot, and kind of get everything boxed off and set into place. Um, if we're looking at particular areas, right? What's up, Thomas? What's going on, brother? Looking at particular areas, right?
Good, man. Good.
The first thing you want to do when you opening up your chart, right, is whether you are just trading this pair or you already know this pair or you get familiar, really familiar with this pair, right? Hold on, let me check something real quick. Sorry, I'm looking for a setup. Hang on 1 second. Maybe on the 1 hour. What is this thing? Oh, that's Bitcoin. Sorry, my bad. Okay, so the first thing I do all the time is even if I know what's going on with the chart, I always check the higher time frames every time. Like I don't care if I'm about to be entering off the 15-minute, 10-minute, 5-minute, whatever the case is. I still want to know what's going on overall, right? And as you can see, we in a downtrend, right? So in order to help you with those sniper entries, you need to understand what's going on from the higher time frame perspective. You can go monthly, weekly, all those. Daily for what we do is usually okay. There may be some zones you may have to get and consider from the higher time frames or whatnot, but that's choosing your targets. But for now, what we need to see, we can pretty much tell that our overall bias should be to the downside because EA is falling, right? You can see that if we want to go to the monthly, we can see this, that it's falling. You can see that it's falling from the monthly view. We had a high all the way up here, and now we still downtrending. We can see it on the weekly, we still downtrending, and we can definitely see it on the daily with some clear areas of rejection, right? Clear areas of rejection where we have rejection right here, 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 here. Even can count this, and then at this point we should be looking to push up to reject this trend line again if it's still going to respect it, right? So that's the first thing when you want to know how to get those sniper entries, right? Because you need to understand what direction you need to be trading in, right? And that's the most important thing about it. So now when you come down to your lower time frames, like your 4 hour, right? And you see, all right, I am near some all-time lows or some more recent lows in this area, right? So I've already rejected or came close to rejecting this trend line. Now we have an overall trend line that's reacting to a daily trend, right? Mute Thomas right quick. We got an overall trend line, and then we have an intermediate trend, right? So this is our higher time frame trend. This would be our lower time frame trend right here, right? That price is reacting to. So in seeing this, we've had rejections off of this trend line right here, where we had 1, 2, 3, 4, and now we're looking to make a fifth. where we either reject this or we break through it and we surface up to this higher time frame trend. And now, when you're looking to get the sniper entries, right, there are a couple of ways you want to look at this, right? And you got to back test this. You have to back test this, right? The first thing you need to understand is Kim gives out 2 trades, and every time she give out a trade, she actually gives out 4 trades, right? Because when her trades are break and retest, right? And in those cases, you should actually consider those as 2 different trades, right? Because if we were going to trade the break of this area right here, let's say this was going to be our buy break, and then let's say this is going to be our sell break right here, right? You actually have the ability to take 2 types of trades, right? And it's all going to depend on like what's the momentum of the market, right? A breakout trade is taking the trade that immediately flies through this zone, which could lead to a fake out, right? The retest trade is me entering in off of this wick to push up to my target, right? And then you also have an overall retest of a certain trend where it takes a while for a structure to come back to the area and it retests the same area, right? So it's really 3 ways you need to look at every trade you take based off of Kim's strategy. So you want to understand, am I taking the break? Am I taking a retest, or am I taking a retest of the structure, right? And sometimes a retest will happen like this, where you immediately get a retest, where it broke above, closed above, then it came back down, retest, and pushed up to the target, right? Or sometimes you'll have a retest like this, where it breaks and closes below. It doesn't hit our line, but it falls down anyway, and then it comes back later on to retest it. This is a structure retest. This is a minor retest over in this area right here. So the main thing that you want to look for when you're looking to get the sniper entries, when you're looking to get the best entries that you can get when you are looking for the entries, are you want to see that the price closes below. This is what a good close looks like. However, what you'll notice, if we were using this as a zone right here, right, our target would have likely been somewhere around here, right? Hang on. Our target would have likely been somewhere near this area, right? So if we were going to take this trade, right, you wouldn't necessarily want to enter on a break right here, because the momentum pushed down, you can enter in on a break and you would have got the target, but there would have been too much of a chance that this could have turned around. And you know that because of this wick that it left on the previous candle, right? So you want to make sure that you get a good close below if you were taking a sell from here. Now, this next candle is the candle that you want to look for your entry on, right? Let me highlight, change the color of this so you can see it a little better. The next candle is the candle that you want to look for your entry on, where it breaks and closes below here. It closes and it opens and pushes up to reject the level that we're looking to trade from. And that's where you want to enter your trade, when you see that it's rejecting this area. And you had two opportunities in this area where you could have got in on this candle, or you could have got in on this candle. Or if you missed it all together, that's when you don't take this trade. You wait till it comes back around, and now you got rejection over here. And that would have been another entry that you would have had right here in this area where you could have entered in on either one of these candles. So in this, looking at it from a 4-hour perspective, right? You would take this same approach if you were taking this trade from the 15-minute, right? Everything I just told you applies to the 15-minute, right? So once we see price near our area, right? Ooh, this is so choppy. So choppy. Gross. Yeah, this is actually gross. Yeah, it still did what we needed to do, but this is really, really gross. So just like I said before, right? This candle broke and closed below, right? However, notice how these candles gave you these ugly looking wicks right here, right? And then this candle, it never pushed back up, right? This candle never pushed back up. And when it finally did, it gave you the wick. So if you were going to try to use these candles, this would have been telling you to wait. These candles are telling you to wait. Because once you see that you get the break and close below, you want to see the candle tell you, hey, I'm going to reject here. I'm going to reject here. And even if you had gotten into one of these candles, guess what? You would have pushed down, seeing that you were near these wicks, and this should have been your signal to say, this isn't ready, right? This isn't ready because we're getting all these wicks. All of these wicks are telling us to wait, right? And what happens eventually, you see, we get a break and close above our level. And then we get a push back up, right? So if you're taking a trade, you want to see a clear break and close below, a clear rejection, and that's where you want to enter your trade. So in this case, if you had to enter down here, you would have been in a little drawdown, right? You would have been in some drawdown. You would have, hopefully you wouldn't have panicked to see that, I was still good. But in this case, you wouldn't have wanted to take this trade at that moment because it broke and closed above the level we gave to buy, if we were going to sell from here, right? So this would have been a sell right here. If we were going to sell from here, you wouldn't have been able to take this because once you saw that it was failing right here, every time it broke and rejected, it rejected and pushed back up. But once you start seeing all of these wicks, that should be your signal to hold off, because these wicks are telling you that it's trying to push up one last time, or it's trying to push up in reverse. And then especially when you get this candle series right here that break above it and close above it. And now you can either take this entry or you can let it come back down, break, close below, come back up, retest, and then take the trade. In this case, you would have got the same type of series of candles. This candle wicked, pushed down, this candle came back up, this candle rejected, this candle rejected, this candle rejected, and then this candle rejected. So you had 1, 2, 3, 4 very, very good entries on this trade. And then you hit TP1 or whatever the target is.
Are you saying that those wicks on the bottom would have told you to hold off because
they were bigger than the ones on top?
You can, to simply put it, yes. That's the simple answer. But what this is actually telling you that there's a buyer's sentiment in the market. Like we've reached a low, and at this low, there are a series of traders that are attempting to buy from here. And if they can take control over the market at this given time, then it's going to reverse, right? And the reason being is because people know, back to the higher time frame, right? People know that we're near a low, right? And what are you supposed to do when you're near a low? You're supposed to buy low and you're supposed to sell high, right? So because of that, people are at the point where they're starting to see consolidation, right? The drop is slowing down when it got to this area right here. Like overall, once we got to this area right here, it kind of stopped falling too much, right? And people started to try to buy it. It fell all the way down. We started getting key level support right here, right here, right here. We even consolidated a little bit right here. Then we pushed down. We got this huge candle that rejected and tried to push us back up, and then in reverse. So what's happening right here is these are the people trying to buy it up from here. Because if we look on the higher time frame again, we've already broke above these highs, pushed up above these highs. Now it's trying to use this area that it came back to as support. All this area right here. It's trying to use all this as support. Even though it's below it, it's trying to use all of this range as support to entice a new buy-in move, a new move to the upside, where we may get a little push down below, but overall, the attempt is to continue this move that it was doing already from here, from this area right here, up until it broke these highs right here in this area, pushed all the way up, and now it's trying to use this same area again to hold up right here. So because of that, people know that this is a potential area to find new buyers, right? As soon as people saw that it broke above these highs, they knew that they were going to try to start buying this area up, right? This was a high. This is high. This is the first time they tried to buy. They tried to buy again here. They tried to buy again here. They tried to buy over this series, and now this is their next attempt over here. So the people that are trying to buy this are still in that fashion, that they're still trying to force what they want to see happen. And that's why you see those wicks on these lower time frames, because that's implying the same thing. All of these little ugly wicks right here, all over here, all of this is the market trying to buy up, right? Over here, wicks, it's still going up. Market trying to buy up right here, and it finally gets to do it for this short-term move right here. Another thing you got to consider is, especially when you're trading FX pairs, you need to consider your whole numbers, your half numbers. So in this case, we're seeing this price happen around 1.60000. This number right here, for this particular case, is right around here, right? Because of this whole number, we're going to have some traffic at this area, right? A lot of traffic at this area, in and around. You can count about 20 to 20 pips up, 20 pips down, where you're going to have a reaction to this particular number, right? The numbers you want to consider are and this goes for any pair as far as the whole numbers, half number, quarter theories, whole number theory, where you got your next whole number would be 16, 1.6025. That's a quarter. Your next number would be 50. The next number would be 75. And then the next number you want to consider is 61. And even inside of these numbers, you have your tens, right? So you got your tens, right? Your 10, your 60, 0, 10s, and so on up until you get to 25. So these are, you're always going to see some type of structure, some type of resistance, some type of something around those key areas like that, right? Let me undo this, right? Always going to see that there's something going on around that. So when you know that you're at an area like this, you need to interpret what the candle is telling you to do, right? So we know we at 60. We've been trading above. We've been trading above 1.60000, right? We've been trading above that, right? And in this case, we're doing this. We're coming down to from a high down to 1.6000, right? And we're going to get signs to say that, are we going to break through this and continue? This would be right here. Are we going to break through this and continue, or are we going to reject this and turn around, right? Which one are we going to do? One or the other, because this is a pivotal number, right? And in this case, because of the way that the candles form, by looking at the candles, we got a sign that this could possibly reject to the upside. It did for a short period of time, and then it finally broke through, right? So to kind of wrap all of that question up is, you want to see clear break and close above or below. When you get the clear break and close above or below, you want to see that the candle comes back down or comes back up to reject. Let me go to it again, where you get the clear close below, you get a candle that pushes back up to the area and rejects it. If you miss this candle, you must wait, right? Don't just jump in, right? Only way you just jump in is if it's like a lot of momentum, where you clearly see it breaking and pushing, right? But if you miss this, your next entries are over here, 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 and here. Each of these candles pushed up and reject. Each one of them pushed up and reject. If you miss these, you wait for the overall structure to get retested, which came over here, where the market pushed us up. We got a clear reversal pattern where we got a rejection. At the high, we got what's called a vector right here, where we have a high, a lower high to the left, a high, and then a lower high to the right. You want to look for a candlestick pattern that looks like this. The best way for you to take this is, once you see that this candle rejects, you're going to wait for this candle or this candle to take your entry. And then that'll get you in this move to go down. Okay? That answers that question, Valentina?
That wasn't my question.
Huh?
That wasn't my question. My question asks about the how do they find the patterns? Like, okay, what time frame do y'all look at? Because it don't look the same when you change the hours. Which is the best time frame to find the patterns?
What? Okay. Oh, dang. So that was Devin's question. That was Chin's question. My bad. Sorry about that.
Mm.
Sorry about that. Let me see. All right. So Chin, that was it. That answer your question, brother? Is he still on? I'm gonna assume that that does answer this question. Okay. All right. So Valentina's question was, what time frame do you look for the patterns? I see him though. Okay. Me personally, it depends on a couple things. I like to stick with I like to get my patterns on nothing lower than the 1 hour. And I really, really like to see it on the 4 hour because those are that's more information, right? The higher the time frame, the more information, the more accurate it is, right? So if I see a head and shoulder on the 15-minute, the 5-minute, 30-minute or something like that, a lot of times those are not what the clear picture is, right? So if I'm looking at let's see if we can find a pattern over here, right? Okay. So in this case, this is a nice little head and shoulder right here, right? We got a left shoulder, got a head, got a right shoulder right here, inverted style, right? And then if we look over here, let's see what it's saying on the 15-minute, right? The 15-minute is telling us we got a double top right here. We got it the same pattern on the 15-minute, but you would have to see this on a higher time frame. But you can see the pattern a lot clearer if you're looking at the 1 hour, even go to the 4 hour, right? Head and shoulder, clearly see that right here. That's attempting to form, right? Where we got our inverted head and shoulder, right? You can see it over here, where this would be head, left shoulder, head, right shoulder happening right here. And now we're trying to form this shoulder right here. So it gives you a little better picture, right? A lot cleaner than dropping down to the 15-minute or the lower time frame, because you want to see this as clear as you can, right? You don't want to have to like guess on it, right? And the higher the time frame is, the better to see, right? And then another thing is the market is fractal, right? And fractal meaning everything you see on the lower time frame, you're gonna see on the higher time frame. Everything you see on the higher time frame, you're gonna see on the lower time frame. So as far as like what time frame you're gonna see a pattern, or what's the best time frame to see the pattern, it you're gonna see it all on every time frame. It's just a matter of what you're looking for as far as your entry goes, right? So if I want to see, we just established that on the 1 hour, we just saw a head and shoulder, right? On the 15-minute, we can see that same head and shoulder, left shoulder, head, right shoulder, right? Go to the 5-minute, zoom out, left shoulder, head, right shoulder, right? Same pattern. You can go to the 1 minute, all the way down to the 1 minute, right? And just zoom out. Let's get rid of this. Here's my right shoulder, head, and then here's my left shoulder. So you're gonna actually be seeing the same thing on all time frames, right? I go to we don't even use the 2 hour chart. I can go to the 2 hour chart, right? Left shoulder, head, right shoulder. and it's trying to buy. So the question is, depending on the type of trader you are, and depending on how many pips your trade setup is looking at, how many targets you have, will depend on the time frame you should look at the trade. If you're a scalper, you should probably stick to the 1 hour, 15 minute, 5 minute, right? If you're intraday, you should probably stick to the 4 hour, 1 hour, and maybe the 15 minute. If you're a swing trader, you probably need to stick to the daily 4 hour and the 1 hour, right? So for the way we trade, the way Kim trades, a lot of her setups are going to come from the 4 hour, going to come from the 1 hour. So if she saw a head and shoulder, she would be looking at the 1 hour. She would see the head and shoulder on the 1 hour. She might recognize it on the 15 minute, but she'll know, all right, I see it on the 15 minute. So it's also happening on the 1 hour, right? And the reason why that's important to understand is because if I'm looking at this candle, like say for instance, I'm looking at this candle to retest and buy again, right? On the 15 minute, this candle, when it retests, may tell me that it's gonna come down right to this level and then reject, right? On the 5 minute, it might tell me it may only be coming down to here to reject. But if we stick to the higher time frames, like in this case for us, we're gonna say the higher time frame is the 1 hour. The 1 hour said that we still had to come all the way down here before we actually got a rejection and an entry to take this buy, right? Just like right now, this would have been a good rejection entry, right? Because this candle opened up, it pushed down, it rejected, and now it's trying to push up. And if you had took that entry, we would have been looking at, roughly 69, 20 pips of profit right now. Roughly 20 pips of profit, right? So you want to understand that all patterns that you see, you're going to be able to see them on every time frame. You as a trader have to understand, is my setup going to be based off a 15-minute time frame? Because if so, I need to be using the targets that are coming from here, right? This would have been my target right here, right? This would have been another target probably up here. Right? And then this would have been another target up here and then up here, right? If I was trading this off the 4 hour and I'm looking to take this trade, right? Now I'm saying, okay, if I'm looking to buy right here, this my target right here at this buy break. Then this next target is my target right here, right? And then my next target would probably be somewhere right here. Because now I'm trading this same head and shoulder, but I'm trading it off of the 4 hour time frame. So now, because I'm trading it off the 4 hour time frame, I am going to be looking at bigger targets versus trading this same head and shoulder off of the 5 minute, where my targets are going to live in this area somewhere, or off the 15 minute, where my targets will live in this area somewhere. Okay.
Yes.
Got it?
Yes.
Okay, cool. All right. Natasha asked about recognizing patterns and what occurs after those patterns. It depends on the pattern. It depends on the pattern. And to understand that, right, let's pull up some patterns. I think it's a good little sheet inside of the Discord. Trading resources, and just if you haven't looked at this, please go in this folder, trading resources. This is a good section where we all drop resources for you guys. If you guys still have questions about entries, I did a really, really, really good video on YouTube that talks about entries. So after this, I would suggest that you guys go back and watch this. Watch this video. And then this is a good video to talk about entering trades, stop loss, take profits, trailing stops, margin, what margin is, what leverage is. I would suggest you guys watch that too. So, and it's under the Discord, under resources, and then trading resources. Okay. So let's look at some of these patterns, right? This will work. Can I zoom in? Okay. So, all right. So if we're looking at reversal patterns, continuation, or bilateral patterns, right? We'll start at continuation, right? And in most cases, we're going to be trading like box off. We're going to box off our trades, right? And our entry will be at the high, stop loss below, targets up here, right? If we're looking at something and we're in a bullish environment, right? And we want to see like, where is this going to go, right? So let's say this is our first example because we are looking at this area right here. The way that this is looking like, right? We have, like we said, inverted head and shoulders. We go back here. That's what this would look like, right? Inverted head and shoulder. This is implying that this is a bullish move, right? We've had a test of a low. We had another test of a low and another test of a low. That's implying that it's ready to push up, right? So in this case, naturally, our instinct should be to trade this to an upside move, right? Because we got a left, head, right? So as far as determining like the direction, we got the direction. Let me check this. Let's see, more clear or trading view charts look like a flat line. I don't know what it did. Okay. What do you use for confirmation? Okay, I'll ask that again. So we know we have the setup for inverted head and shoulder, and we just saw that inverted head and shoulder is considered a bullish trade. So we should be looking to push this to the upside, right? So if we know we're looking to push this to the upside, and we know we are looking for this to possibly buy, we should be expecting that once this pattern forms and it pushes up to buy. Sorry about that, Christine. I'll definitely go over it. How long are you about to be on break or anything like that?
I'll jump back in as soon as I answer this call.
Okay, yeah, answer the call,
right.
and I'll try to get to your question after this.
Thank you, Corey.
All right. So when you are, when you have just broken through all of these levels, in most cases, because we've traded through all these levels, price is looking to actually return to one of those areas, right? And so likely this inverted head and shoulder is going to push up to come to an area that has already been and retest that area, right? So in this case, we may be looking at something where we get something like this, where this was our left shoulder structure, head, right shoulder form right here, And then we may want to come up and push up to this area, right? And it may look something like this, right? May look something like this. We already getting a little bit of that already going right here already. So, and the reason why I picked this area as to where it's coming to is because of this structure right here, right? This structure would be the first, if it pushes up above through all of this right here, this would be the first area we were likely to see that we get some rejection. And if we get rejection right here and we push down, guess where we're going to likely get some rejection once it comes back down right here, because it's already tried. It just broke through that. This would have been a fresh zone. And now it's going to try to come back down and retest to this area. If it doesn't hold right here, it's going to try to come back down to this area, because these are the most recent areas of rejection right here. That's for this particular pattern, right? But if we go back and go through the rest of the patterns, you'll see that based off of each one of these moves, anytime it breaks this, if we were trading this double bottom, right? Price comes up, it's going to look for a new or older area of rejection. And once it takes that out, it's going to try to retest the recent areas. So if you traded this double bottom, price is going to find a low, a previous low. It's going to retest it, and then it's going to trade back to the neckline to reject. Same thing for this. Same thing for a head and shoulder. If it breaks this neckline, price is going to push down to find a low or a previous high. It's going to take that out, and then it's going to try to come back and retest the neckline to continue down in the same direction it was trying to go. Every time you take a trade, all price is doing is breaking a structure or breaking a certain area, take out a high or a low, which it did right here, come back, retest. Exactly what you just seen right here. Right here, what do you got? Left shoulder, right shoulder, left shoulder, head, right shoulder. If you took the trade from here, or you can trade the trade from the neckline, which is about right here. Price pushed down, and gave you the left shoulder, broke it, traded all the way back up, and then you had your rejection. And then it went and found a new trend, a new trade. So you see it's repeated all the time, over and over, over and over, right? And it doesn't matter. It doesn't matter what pattern you trade. Price is always looking to take out an old high or old low, and then it's going to come back to retest it and then continue in the direction that it was trying to go to in the first place. Answer your question, Natasha? I think so.
Yeah, it did. Thank you.
Okay. All right. Robin asks, do you still trade using Oanda on TradingView? And can you share your experience? I still have a Oanda account. And I just use those. I just use that to trade. That's kind of just my little throwaway account. Like, I don't really use it for anything, but to like take just demo stuff. Like I not demo because it's a live account, but like if I just kind of feel like just testing something out, or I just want to get antsy and just, I don't care if I lose the money in that account. I just kind of just throw that on, because Oanda is a good broker, but they don't give you a lot of leverage. They only give you 50 to 1. So, if you don't mind growing your account really, really slow, then it's fine. you can use that account. But it doesn't offer you a lot of leverage, and you can only trade forex pairs. You can't trade indices. You can't trade gold. You can't trade all those on Oanda. And then the only other good thing is you can actually take trades from within TradingView, and you don't have to use MetaTrader. You can take all of your trades inside of here. It seems cool, but I didn't really care for it using it inside of the TradingView platform. But I'm sure it's people that probably feel the opposite. So I mean, if you have a Wanda, and all you plan on doing is trading FX pairs, then I think you'll be straight doing it. But you'll need to understand that when you take a trade in the Oanda account, let's go to connect the paper trading, right? If you connect to it and you try to enter a trade, right? Let's see, trade. If you try to take a trade, right? Let's say we wanted to trade right here. You're going to need to enter the trades, and your lot size is a lot different, right? So you'll have to understand that how to equate this quantity to a unit, one lot, and I don't necessarily think you want to do that. So I would just stick to the NT4. So that's my experience and thoughts about that. Elizabeth is next. She asks, how do you copy and paste trade signals with mental stop loss on demo? Mental stop loss and copy and pasting the trades, that's a little that's kind of two different questions, because copying and pasting the trades, that's just take the numbers. Let's see, we give out the trades or whatnot. Let's use a Sunday session as an example. Okay, so here's all the trades from yesterday, and let's say we went to oil. Let's say we went to oil, right? And let's grab the numbers off here. The sale was here. And then the buy was here. Right, okay. And then let's buy break, sell break, right? Okay, so if this is our buy break and our sell break, right? We know the numbers, we got the numbers from the trade setup right here. All of our targets right here for the sell, all of our targets here for the buy, right? Now, first, let's decide where our stop loss would be for a buy or for a sell. Let's do that first, because when you don't have the stop loss, you are going to be you're going to have to determine where's the best area for the stop loss, right? So if we measure the range, right, the whole range is 60 pips, right? So that means the range is 60 pips between the buy and the sell. And then the target is 53.28. The overall target, 53.28. So that's right around here. And then that's for the buy. The overall target for the sales, 50.69. 50.69. So that's about right here, right? So this is the overall target. And if I bought this, the overall target is going to be basically 100 pips for the buy. And then about 90 pips for the sell, right? Okay. So if I'm going to buy this, I want to make sure that I'm trading it at least 1-to-1, where if I risk this 100, I need to be only losing 100, right? Or if I'm losing this, if I'm winning a 90, I don't need to lose more than 90, right? But in this case, we have some clear areas of rejection that we can use as stop losses beforehand, right? And then the first place you're going to look at for a stop loss for a buy is these highs right here. So if I bought this, I need to say that if it breaks below this, I may need to consider closing my trade, right? That's using a very, very tight stop. But if this is our break and we look to the left, this is where our first area of rejection is right here. And you see where I chose this wick, right? I can even take it out to here. This is if I broke above this and started trading above this, and it started to push down before it hit my target, this would be the first area of rejection, right? But that's using a very, very tight stop loss, right? The next area is down here, right? I got wicks here. I got wicks here. I got bodies here. I got wicks here. I got wicks here. I got wicks here. Guess what? That's my next area of rejection. So these two are my most recent area of rejection. And because of that, I would be using these two as potential stop loss area. If I want to use a tight stop loss, this would be it. If I wanted to use one that's going to give the trade a little more room, this would be it, right? So that's the first thing, right? And this would be the stop loss for the buy, right? Let's label that. And let's just say this one would be tight stop. All right. Now, if I'm going to sell this, right? Let's slide you. Yeah, sell this and do that. If I'm going to sell this, right? And that's 51.66, right? If I'm going to sell this, I need to take the same approach. So I can pretty much use the same areas for the stop loss for the buy and the sell, right? Because if I sold and it started to push down and it came back up, if it closed above this, I need to kind of be concerned, right? That's the most recent rejection. If I was to start selling off and I don't hit my targets down here before I get above this, I need to see, is this going to continue? So if I don't see any rejection, I need to start looking at, okay, maybe I need to start to close this. If it closes above this, then maybe I need to start closing it. But if it rejects this area and continues to go down in my favor, then I should be staying in the trade. As far as handling the mental stop losses, this is the way you would want to handle it, right? First, you need to establish where your stop loss should be, right? And we've already established that this is the stop loss for the buy and the sell in this case, on both. This one is a tight stop loss for buy. And then the one below would be a tight stop loss for the sell. But these are the most recent rejection areas. So when you're using a mental stop, right, you want to just maybe use an alert instead of actually putting your stop loss in right here. If you're taking the sell, if I'm taking the sell, I put an alert in, alert triggers right here, price comes back. Price essentially does this. It pushes down from here. You're in the trade. Then you see the price start to push up and it gets to this area, and then your stop loss alert is triggered, right? Once you hear the alert or get the notification that the alert is triggered, it's not to say to close the trade. But if you see the price break above this and close above this, like this candle did, then you may consider to start trading or start closing that out, right? If we're using this as our break and our sell, and then we see price start to come up to this area, this is actually a more feasible stop loss for this sell. That's actually giving you enough room. So once the price comes to this area, if price breaks and closes above this, like it did right here, and you see it to continue to push up, that's when you want to say, all right, this trade looks like it's going the wrong way. It's not going to give me the sell that I thought. It is wicking though. So that may be, even though it closed above, it's still actually rejecting. So maybe you want to give it a little more room, but this is the decision point right here. Do I stay or do I go? And if you stay, you're going to be looking for it to reject like it is right now, and then push down to your target, right? Same
But
thing
typically wicks on both sides of the candles.
on these. Well, yeah, you're right. But when I'm saying that I'm looking for the wicks, because I want this to sell, I need to see the wicks on the top. I don't want to see the wicks on the bottom. If I'm selling this, I don't want to see wicks on the bottom. I want to see that there are stronger wicks on the top that's telling me that this is going to drop. It would be the reverse if I was going to buy this, right? If I was going to buy this, I would be looking for a price to break above here, hit my targets, right? Then if price decided they want to come back down, I want to see that the price starts. If it doesn't reject here, I want to make sure that the price says, okay, cool. It needs to reject here, right? And I'm going to look for, as long as the price doesn't close, the body doesn't close below this, I'm going to be cool, right? Let's say it doesn't, right? It keeps going down, right? It keeps going down, right? And it gets to this point. My mental stop loss alert triggers and says that I'm at this particular price. I don't need to see a body close below this area. A body doesn't need to do this, right? Close below, right? Once I get to this area, I need to see candles that are doing like this, that are rejecting from this angle, from the bottom. At this particular point, I need to start seeing candles that look like this. If I'm buying this and I'm trying to determine whether or not I'm staying in this is what the candles need to look like to know that I can stay in this trade and look for it to continue to the upside. When you see long wicks like this, that means that at this low, people decided to buy it from here. Price dropped down all the way down to this point, and bam, somebody decided to buy. That's what you want to see when you're looking at the mental stop loss. If it hit your stop loss, it hit the alert. That's the difference between using a physical stop loss and a mental stop loss. The physical stop loss means that your stop loss is set at this particular price. You've already entered your numbers in on TradingView. I mean, not on TradingView, but on MetaTrader to put in your stop loss. Your stop loss was whatever this number is right here. What is this? You were trying to buy and you used the stop loss at 51.93. And then when you got down here, your stop loss was just triggered. It closed you out the trade. When you're using a mental stop loss, you're probably going to have an alert at 51.93. And as long as it doesn't close and close below 51.93, you'll stay in the trade. That's the only difference. Got it, Sam? Got it. Got it. Got it. Got it, Elizabeth. Okay. Having an issue. Okay. Evelyn. I'm having an issue recognizing when to enter a trade. I think I went over that in very, very good detail. Let me make sure that y'all get this. You guys have to watch this. Like, this one is probably one of the better videos that I did. This one right here. I ain't even gonna copy it. Just go to this and watch this right here. Go watch this. I went over it just a couple times, but watch this. And the thing about this one is if you look at this, I just went over it earlier. I hope you were on, but in this, matter of fact, let's open up this chart. I gave you guys some examples on this chart, right? Gave you guys some good examples, some bad examples. This was a bad example. Like, you see this, if we were gonna buy from here, the price alert alerted us for the buy, but it pushed near rejection area, right? Right up here, right? It pushed up too hard for us to take this entry, right? And then this candle right here, price did finally break and close above. So like this candle right here, it would have triggered us for the alert that this was about to break. But then look, it immediately closed below, back below. And then this candle, even though it closed above, look at the type of wick rejection I got. So you wouldn't necessarily want to take a buy on this trade, right? Like I just wrote here, price finally did break and close above, but near rejection, and the candle rejected. Some people would have entered on the next candle for a buy, and in other cases, we would have had, in our case, we would have waited for the wick rejection, for the actual candle to close above. The wicks tell the story. You're right. And so the people that would have entered into this trade, you saw how I just mentioned, uh, where the stop loss would be, right? This would have been where our stop loss would have first been right here. Then after that, guess what? We would have got that stop loss triggered again once we got down to here, because this is the next rejection area, right? What did price do? Did price push down and give us a wick over here? No, it didn't. Price broke through. So now, if we were using a mental stop loss at this area right here, this would have told us to close this trade out, and we should be taking the sell. So definitely review this. This video and the video and this markup right here. Read this, study this, go over this, memorize all of this right here. Like this is a really, really good dictation. It's right here. I'll copy it and you can drop it in here right quick.
Hey, Corey. I don't know if you hear me good on.
What's up, Devin?
Can we go over the Gold Cup signal that was called out? I think at like 3 o'clock today. I think it look for me right now. Like I know what my thing is that I get in after it pulls back, but that could be something I'm doing wrong. Like, could you go over it right quick? And see if I get a good call to get in now or no?
Let me see what it was. Gold Cup.
So the SPXL.
SPXL.
Thank you. Yeah, that was it.
US 30. Was it at 37.98?
Yes.
Okay. 37.98. Let's look at that right quick. 37.98. So it was the same situation, right? Same thing we just kind of described, right? Where 37.98. Right? What happened at 37.98? Right? If you're not watching the charts, like, could you have taken this trade? You absolutely could have, because you could have just saw the momentum, you get in, take your bag right here and get out, right? But that's, I mean, just looking at this on the 1 hour, that wouldn't have been a good trade. But in this case, it was called out at 3:15. So what I just told y'all before, right? This candle broke and closed, right? But the next candle, that's why you gotta wait, right? You need to be watching this candle, right? This candle it was called out at 3. It was called out at 12:15. I don't know what time zone they
Yeah, it was
used.
called early Corey, but it wasn't ready when it's called.
It was called.
It was then about.
So I'm seeing 12:15 that it was called 12:30.
Yeah, about that. Yeah.
So that means that 12:30 was here.
It wasn't ready. It was almost close to entry, but it didn't.
12:30.
Corey, it went close to entry, then it wicked and went all the way back up, and then it came back and broke and closed. I entered. I was in somewhat profit. I think it went down to
96.
94.
It went down to 96.
Yeah, about 94. It didn't hit 95 yet, but TP was 93. So it's just hit the stop loss at the moment. I didn't put it in, but I'm seeing if the candle closes above it on it.
Marlene, do you know exactly what time you entered it? Because you entered pretty much around the same time she called it, right?
One sec, let me check. I'm on the UK time, but I remember the time.
Okay. So it had to be around this time right here.
Corey, she did instruct to buy it on the break also.
Buy it on the break. Okay.
Yep. And the stop loss is 38.08, and it hasn't closed yet on 38.08.
Sell on the break.
Sell on the break. Okay, so it had to
Yeah,
be.
so the trade was released in my time at 7:35 UK time.
7:35. Okay, hold
So
on.
5 hours, you guys would be 5 hours behind.
7 hours. Okay, so
about
for
2:30 your
you,
time. 2:30
7 p.m.
Eastern. Yeah, so
2:30.
7 p.m.
2:31 Eastern.
Yeah, so it'll be around 2:30 Eastern time.
Y'all should keep this too. Like, this is a good little app to have, little website.
But I think I didn't get in until maybe about maybe an hour after that, or
So she called it around 7:30.
Yeah, so 2:30 Eastern.
2:30 Eastern. So
Yeah.
Okay, cool. So that still lines up. So okay, cool. So that means that it did come between this, right? So 2:30.
Yeah, it closed under the candle broke and closed underneath. That's why I entered.
Right. So it was this candle.
Yep.
So yeah. This is a perfect example of okay, the candle did close below. But once we saw that it came back up to retest, right? We want to start looking for rejection, right? And it looks like in this case, let me go to the 5 minute and see something. This same area, right? It closed up, right? So this broke below. You can see on the 5 minute, it pushed up, rejected, and came back down. And then it pushed up, rejected. I'm sorry, it pushed close right here. It pushed up and then it rejected again.
Good fake out.
So it faked y'all out. Yeah, it faked out. Okay, so in this case, even on the 5 minute, on the 15 minute, on the 15 minute, I wouldn't have necessarily probably taken this because of how nasty this wick rejection looked. And if I did take it, once you see like right around here, you can see even on a 5 minute that
the evening star there, no, Corey?
Yeah, it started getting even lows right here. Like once you start seeing like, okay, it pushes back up into the zone and then it rejects again, right? It started to reject. You kind of got to start wondering like, is this actually going to drop? Is this actually going to push down? Because this would have been like on the 5 minute, this would have opened up and already pushed up, right? This should be a sign like.
When I see that, Corey, I thought it was a fake out.
Yeah, this should be one of those signs, like Neil said, like this should be one of those signs where you probably want to wait before you take an entry. And if you do take the entry, instead of taking it near this area, you let the candle come all the way up here. And if you get in around this area when you see it rejecting, even if it does go against you, you still would have took, 50 pips, 60 pips before it actually would have, claimed back up and stop you out. Because if you take it from here, when you see it doing something like that, now you got time to make a decision. Do I stay in this trade or do I take a break even up here? Or do I just let it hit my stop loss? Because if you do let it hit your stop loss, then you, instead of you taking, what is this, 39 pips, 39 plus 58, 80 something, 100 something pip stop loss, Now you're just using 60 something pip stop loss.
Yeah.
And another thing is this little rejection right here is typically like another sign, like maybe I need to let this fully develop before I enter this trade.
Or could I say something real quick, a suggestion?
Yeah.
And I got it from Travell actually, is, and it's based, I usually take a partial, like if I wanted point, if I wanted 0.1, or, I would do a 0.05 initially when it breaks. And then when it goes all the way back where the wick is at, and I want that sniper extra, I put my other partial in there too.
Yep. That's called scaling in.
She's just changed the stop loss. She sent an update in. She's changed the stop loss from 08 to 09.
Yep.
Saying that she's monitoring the trade.
Yeah, that sounds about right. That's called scaling in.
Yeah, that's what I do, so I could keep me from, crying. I like to see blue a lot.
Yeah.
Well, I got a higher entry, Corey, because what I did when it broke and closed, I know the candle always retraced. So I waited for it to retrace up, and I got in at 3804 and 3800.
Yeah.
So I'm not in major drawdown, so I'm not sweating it.
Yeah, that's good.
So obviously, once it break and close, it's always going to pull back. So I waited. The candle was did a whole like nearly 50% of the retracement. So then I said, okay, I'm going to take an entry.
Yeah, that was good. A lot of times, for me, even when I'm seeing that, certain trades are called out and I see like really strong wick rejection, I'll wait, I'll wait. So instead of getting in down here, I'll look to get in right here.
That's it. I like to get in when like people are in drawdown. So I'll call them. I'm like, oh, you in drawdown? I'm like, okay, I'm getting in.
Yeah. Like, I ain't gonna lie, y'all. Like, sometimes I love to hear that people in drawdown, because that means that I can get a better entry.
That's it.
Because that means that I'm being patient and I'm waiting to get the good entry,
You're waiting on the pullback.
Yep. Waiting on a pullback.
A lot of times when you guys do say, and it's not that we hold you to it, but if you do say, oh, this, buy now, I usually give it a little while. If I lose it, I lose it. I always figure it's gonna come.
That's how I see it, Thomas. That's how I see it. Because today when I saw that, and I was saying,
a lot of times, and I don't care who giving the trade out. Sometimes that will be me sitting on my hands. I'll be waiting, and if it go, another thing I'll do is if it's gonna go and I just think it's gonna fly, I'll pick an area. I'll pick an area and I'll just put a buy stop or a sell stop. So if it's gonna go, I'll just use a smaller lot size. I'll split it in half, and then I'll just put a buy stop. And then that way, if it's just go, then I'll just get pulled in the trade anyway. And then I'll just take some of the profits off of that trade and just close it out once it hit to a rejection,
I think 90% of the time, the trades, once everybody goes in, it always pull back.
Yeah. And if it's one of those trades where it immediately go into drawdown, I just be like, because 9 times out of 10, I might have saw something like that's gonna give me a chance to hold off real quick, and then I'll get a chance to get in after that. So, some of those, like Thomas said, I don't like to see red. Like, I do not like seeing red. And sometimes what you'll see me do is I'll put like, say for instance, this was the trade and I see it pushing up, right? I'll wait till I get like something that look like this, and then I'll just put a buy or sell stop below this. So I'll automatically just get pulled in, right? Whenever it go and do whatever it's gonna do. And I'll just, or like if I think it's gonna sell, but it's pushing back up, I'll put a stop right here, so that as soon as it drops, it'll just pull me in, and I won't have to worry about it.
That's a good trade idea. I just put a sell for 3807.
Yep. It's the same trade, you just have to, I usually will split it because just to kind of lower my risk, but that's what I would do. Do you also see inverted head and shoulder on US, on NAS? I can see a head and shoulder, left, head, right, inverted. Yeah, if you ain't counting the wick, you're not counting the wicks. Okay, let's go back to the questions. All right. Having issues recognizing entry, fib extensions, when to trade them. Christine, this your question. Okay, let's go to this chart. Clear all this stuff. Okay, so fib, bam. Now, I use my fibs a little different from everybody, and not even different. Like I just use standard issue fib stuff, and then I also have some other stuff I add on to it. But the first thing I want to tell you guys, if you are really, really unclear as to where you should put your fibs, this tool, this indicator, higher high, lower low, live by Lonesome the Blue. It has 857 notes or whatever this is on it. Is a perfect tool for you to use to understand where you should put your fibs. If I
Hey
was
Corey, I'm sorry. This is Christine. I'm sorry, I had to hop back in and hop out. Are you at my question now?
I am at your question.
Okay. Just to clarify what I was saying, I am talking about when there's like no new data. And it's like, okay, where do I take my fibs? Because if I put my fibs on the monthly time frame, I still feel like that 50% is still important, even if it's new data. So can we do Bitcoin, for example?
Bitcoin.
That's the one with some new data.
Bitcoin.
So just to give more information about what I was doing, I started from from December, and I had my fibs on the monthly. Well, of course, it broke that 0% and just went up and up and up. So
Where
to
you drawing your
calculate
fibs
my
from?
entry,
You drawing them on a monthly, right?
Yeah.
Let me go to another one. Let me go to another one. Let me open up another Bitcoin. Let me open up another one. It's got some stuff on there I needed. So Bitcoin. What is it? Coinbase. All right, monthly. Monthly. So if I was drawing my fibs, I'm going from here to here, right? And another thing you'll notice about me is I draw the fibs in the direction that I'm looking for the chart to go. That's just my personal.
Gotcha. Okay.
And I do that because I want to have all of my areas already drawn up. So if I was looking at this and I'm saying, okay, here's 0, this is where my impulse started. It pushes up to here. I should get a retracement to here. At the worst case, at best case, my target should be at least to here or at least to here, right? So if I was looking at Bitcoin, this is where my target would be looking at based off of this. If it pushed down to here, I'm looking at this as my target. If it retraced to the 68, 618, shallow retracement, I'm looking at here. That's how I'm
All
taking.
right. Do one thing for me though, please. Drop. This is just so I can see how it extended compared to December to January. So can you put the 0 or the 100% down to the top of December, and I just want to see how it extended.
The 100%.
No, does it take the 0? Yeah, leave a 0 there. Put it to the top of November. I'm not December. I'm sorry, December, because we in January, right?
December.
All right, so that's December. Oh wow, it came retraced to the 100, went right to the 150.
Yep.
That's all I needed. That is all I needed, Corey. Thank you so much.
And look, if you go to, so that's on the monthly, on the weekly, you really ain't get no retracement though. You haven't really gotten no retracement yet. So you had targets though, and like you can get these targets, right? These targets actually came from this move. So if we look at this, look at where our target's coming from. Like these targets aren't based off of new movement. This is coming from this. Here's our 200 extension off of that original $20,000 move right here.
Real quick with that question, with the extensions, how did you, I mean, because I see you went to 38, you went to the extension of 127. So what makes you go to those different extensions?
So when you have, it all depends on how shallow or how deep the move is, right? So if we're looking at, so there's different levels of retracements, right? You have deep retracements, you have shallow retracement, you have normal retracements, and those are based off of these certain levels, right? So your key area you want to key in on for your just, normal trend is between 618, 382. That's why I call this the kill zone.
Yeah.
Because this is where you want to see the majority of your retracements. That means you're in a fluid trend, right? That means that you're in a normal trending market, right? Where you have the impulse starting at 0, you have the move finding support or resistance at the 100, and you have your retracement. A shallow retracement would be anywhere above the 786. That's a shallow retracement. If you get a shallow retracement, you should be expecting the equivalent move to the 618 if you get a shallow retracement, right? And you know that by measuring the move, right? I measured this 0 to 100. You got, what is this, 18,000, right? Or whatever that is, 18,000 pips. I measure this 786 to 618. What do I get? Roughly around the same. I'm just short about 2,000, 16,000 pips or whatever.
I got you.
Anytime you get a move that meets fib levels, you should expect a symmetrical move of the same length, right? So if I draw this 0 to 100, I should expect in a normal trending market to get the equivalent of that based off of wherever it retraced to.
Okay.
So if I only met the 618, right, and I got an equivalent of retracement, my target should be the 150. If I got a retracement to the 50%, my target should be 382. I mean 138. You may get some overshoot, which
No, that's awesome, man.
you may get
I
some
never thought of
overshoot.
it like that.
Yeah, you'll definitely possibly get some overshoot, right? But we're not talking about overshoot. We're talking about where we know we'll probably get a symmetrical move.
No, that's awesome. Thanks a lot, Christine.
You go to the 382.
You too, Corey. But thanks, Christine, for asking the question.
You go to the 382. Where is your most obvious area? 217. I mean 127. You go any further down below this, now you're starting to look at trend reversals, right? So when you get a deep retracement like this, that's where your double tops come into play. That's when you may possibly expect a double top. When you get something deeper than, once you get outside of this kill zone, you get a retracement. This is where you will probably see something like this happen, where you get price pushed back up near 100, and then you get a rejection to get your double tops right here. This goes into the harmonics. This goes into trend reversals right here.
Yeah.
And that's how you can kind of tell. So like if you get a move impulse 0 to A and your B is all the way down here near the 2-3, the 12, that's a sign that this is going to be a weak move. I can show you a couple of examples of this. Even
Before you
Bitcoin.
move, Corey, I have a question.
Uh-huh.
I think I've been really practicing and seeing profitable, consistent profits with your Fibonacci, and especially with the kill zone, especially like last night. I seen Bitcoin bust through my 382, then the 50, then the 68. Then it had problems at the 786. I was like, okay, those were the areas I watch for. But sometimes I don't know how far down to take my fib. So if you go back to the monthly, how did you know that point? Is that where the pivots high low would come back in? Or come into
Well,
play?
in my case, I just can see it, but
Okay, do it one more time, please. One more
okay.
time. Let me just see.
In my case, I just saw it. I didn't like consider, but this is where the buy happened right here. This wick.
Gotcha. Okay.
This is where the impulse start right here. And then I like to kind of stick with drawing my fibs on nothing below the 1 hour. Nothing below 1 hour. Like I don't even worry about the fib levels that's on a 15-minute chart or 30-minute chart or anything like that. I always go 1 hour and above. And I really try to stick to the 4 hour. But
yeah,
a really good trick, really easy, is when you guys add this indicator, higher, low, lower, higher, high, lower, low, live,
yep,
it tells you where to put the fib. So I throw this on here. Where did my fib go? Right here. It can't tell you right here because this is all like the data is off. But even if I put it right here, right? There's my low. This my high. Where did we just get our first rejection from? right around the 200. So we should have known this was going to be the target along. That's why people were like, we already knew where that Bitcoin was going to 40,000. That's how they knew.
Exactly.
That's how they knew that it was going to 40,000 once we got this break above 19. They already knew that. And you see how, like I just told y'all, what did I just tell y'all before? Here is 0. Here is A. Here is our shallow, our deep retracement, right? And up until we got to this point, what do we have? A double top right here.
Mm-hmm.
And that double top did what? It pushed us down until we got to this point right here. And what's down here? This is demand. Demand is down here.
I was gonna say
Between,
liquidity for you.
huh?
I was gonna say liquidity. I know you taught us about liquidity.
Not even liquidity. This is demand. And what's demand is buyers camped out down here in this area. They established that the demand was going to be down here for Bitcoin. After it rejected right here, it pushed up, it failed and gave us a double top. In June of 19, it pushed back down to our demand zone that got established in 2018. And then it stacked on buyers enough to push us all the way to 40,000. So the way we approach this, like, and I don't even trade Bitcoin, but the way we approach this, right?
Mm-hmm.
Our lower high right here. Now we got a high. Why you think people talking about Bitcoin going to 100,000?
100,000, bruh.
Why do you think that?
Oh my gosh.
Because guess what? They did the same thing I just did, right? Here's my 0. Here is my A. 0 representing the start of the impulse, right?
Mm-hmm.
So guess what? Our kill zone is here to here, where we should be expecting in a proper scenario as low as 382, right? If it doesn't make a proper scenario, another proper move or whatever you want to call it, here is 0, here is A. I'm gonna throw this on here. If we get a retracement from 382, our target should be 56,000.
Wow.
Right? If we go only get a 50% retracement, right? Our target should be 61,000. If we get 618% retracement, our target should be at least between the 150 and the 618. That'll put us close to 70,000. So with a wick rejecting around this area, we should get a 70,000 target. If we only get a 786 retracement, which we are right around right now at 33, 31 area, that is putting us to our 100,000 target right around here, where if we get a wick all the way up, that should give us our target close, well, like 80,000. Yeah, that should give us our target around that 100 area. So that's why these people are thinking, that's where they're getting all these numbers from. And And another thing to consider, the numbers where we should be looking to buy from, if it drops back down, right? You can find that out too, right? What's this number? 27. That's going to be a good number to buy. 23. That's going to be a good number to buy. 18 to 19. That's going to be a good number to buy. If it ever drops back down to this point, right? What we got right here, a lower high, 13. That's going to be a good number to buy, right? That coincides with this lower high. And guess what else this coincides with? The body of these previous candles right here. Look how these bodies line up with this lower high. Perfect place to buy, right? We can keep going. Body of this candle. Look to the left. Where does this line up with? The opening of these candles almost. That's 10,000. We know we can buy there. So like, if you know how Kim talk about bank numbers? For me, every time when I see these numbers, I'm stacking on Bitcoin. Like, I don't even trade Bitcoin. And I don't trade Bitcoin. I don't even want to get involved with trading it on the active. But as far as holding it long term, I'm gonna add some here, 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 and here. And I'm just never gonna look at that again. Never gonna look at it. Even if I don't do nothing but add $100 each at each one of these levels, add 1,000 at each one of these levels. I'm gonna do that at every one of those points. And I'm just gonna hold it because it just mapped it out for you, right? If we get a retracement at any one of these levels, coming from here, I just showed you, even if we don't break out, even if we go back sideways, right? And we push all the way down to here and we do another double top, we still looking at a drop down to what, 10 to get a push up to 36 area. That's still good. That's still good. Right? Still good. So, and you can take this same approach if you're looking at it from a shorter time perspective. So I think that answered a couple of fib questions. I think we had two of those. Best way to save some profit in trading.
Hey, Corey,
Yes.
can I ask my question now?
Yeah.
Can I share my screen?
Yep. Let me come out of here. Okay. What's up, Anna?
Yeah. I'm good. How are you?
Good, good. Okay.
So whatever you were telling me, I did exactly the same thing, as you can see that on 4 hour. You can see?
Yeah, I can see it.
Okay. So same like that. Means exactly I did this on 4 hour and everything, my target was very clear to me. Whatever was going to be happen, I know what is going on, right? So now my question is, now this is on 200, right?
Uh-huh.
And this is rejecting from there. So now it's coming that side, right? So it came
Hold on.
like it, sorry.
Hold on 1 second.
Mhm.
Okay, what'd you say?
So it rejected 38, right?
Mhm.
And now it's going up. So means this fib level is still working, but should I do new fib from here to here for new
I mean,
move?
honestly, you don't even have to touch your fibs, to be totally honest. If you pull over the kill zone
Mhm.
that you got, the 4 hour kill zone, just
Yes.
drag that over
Okay.
and just leave it exactly in the same levels. Just pull that over, just stretch it. Yeah, just stretch it. to the left.
This is
It's actually going to line up to respect that same level.
right.
Yeah. But I mean, like I was saying before, I like to draw my fibs based off of the direction I'm going. So if I was going to redraw this, I would put my 0 at the 200 and then my 100 at the low near the 30,000
Yeah, exactly what I am asking. Now, should I draw this?
and reverse it. So yeah, go ahead and drop it.
Yeah, I'll do that.
And then once you drop it, double click on it, scroll down and hit reverse. Now you got everything you need.
And this is this new move, right? So now this is going in upward. So should I do this, or this is just I should consider this as a retracement, because now this is
This move that you're taking right now, I mean, with Bitcoin, this could just be a retracement right now.
means I'm not I don't trade this there, but actually I just wanted to understand how does fib work and how does
Gotcha.
Bitcoin work.
Gotcha.
So this is just kind of my backtest kind of I'm doing everything. Sometime I did scalp also. I'll not lie, but when I was very sure this is going to be happen, so I did that.
Yeah.
So this is just retracement, right? And when I'll get bigger than this move, then I can draw new fib, right?
Yeah. So in this case, what it goes back to directional bias, right? And we're actually in an uptrend.
Right.
Despite this move down, we're still in an uptrend. So you technically, I wouldn't be looking too much to sell. I would still be looking for buy because this may be just a retracement for a buy, which it looks like it is because it's already dropped. It's already back up 4,000 points, you know, from the 30 that it went down to. So I would be looking more so for the buy if I was going to trade this, right? And because it's like right now it's in the kill zone from this shift down. So maybe I want to take a trade from this kill zone, right? And if I was going to do that, I would be looking for candlestick rejection
Okay.
in the area that the kill zone lives in. So if I'm looking to take this for a sell, let me see where.
And because this is now, I think it can form head and shoulder also, because this is like
Yep, head and shoulder right here. So you would be looking for the head, the right shoulder to form right here to drop.
Okay. Okay. 20.
Yep.
Okay.
And you would be looking for some kind of candlestick pattern that's showing rejection in this area right here
Okay.
between this kill zone.
Okay.
That's right here.
Got it. Got it.
That's if you were going to sell it.
Okay. Thank you. Yeah, but thank you so much. Means this fib thing made me so confident, and means every means I can assume what is going on, what will be happen, right?
Yeah.
Thank you so much. And
No problem.
take
No
my
problem.
target also.
No problem.
And one thing more, this whatever I am doing on my left side, it's not means all my tools are hide right by
Say what's that again?
whatever I am doing to means drawing this side, it's not this side, right?
Yeah, it should be. As
Yeah.
long as you got the same pair, it should be the same thing. You just have to make sure. Hold on 1 second.
I did the sync button.
Hang on 1 second. You just got to make sure that this link button that you're hovering over right now is selected.
I did that. It is already.
Yeah, it's there. But if you drew it there before you did that, it's not gonna show.
Okay. Okay. Got
Yeah,
it.
yeah, that's what it is. You have it's only gonna take on what you add on after that.
Okay. Got it. Got it.
Yeah.
Okay, actually, I made same thing like in SPX also. So, but this is little bit more dirty. But I am
Yeah.
drawing my fib again and again for all big moves, and I'm trying to find out things. So my
Mhm.
question, I got my answer. I'll do it now.
Okay.
Thank you.
Okay. Okay. Let me steal the screen back from you, and then we can finish up the last couple questions. Okay. Okay. So, okay. Paula asked about the best way to save some profit when trading volatile profit. Okay. So here's the thing. I always take partials once I am up 50 pips in profit, 100 pips in profit. I don't care how good the trade going. I don't care if it's going 80,000 pips in profit. I take partials all the time because you you can win, lose, or draw on a trade, but you always guarantee that once you're in profit, if you take a partial, that's your money. So at that point, you can always take, you can let the trade go, whatever the case is, or however it is. So like if I was going to take this trade that, uh, the rejection of this area, I would have already closed out some of this partial, right? Soon as I'm up 50 pips, right? If I was going to take this trade, right? And let's say that our target was, let's say I was going to take this trade from here. Let's say I was going to take the sell from here, right? And my overall target, I was looking to take it all the way down here, right? And let's say I took the break retest right here. Once I get right here, I know there's a rejection right here. You know what? I'm taking a partial. And if I'm over, let's see, that's 100 pips in profit. I'm taking at least half of my position off, at least half. That's how you make sure that you win your trades, right? Because if you don't meet your daily goal with, and you, if you don't meet your daily goal with 50 or 100 pips, that means that you're trying to, you're probably trying to get a goal that shouldn't be reached based on your account size, right? If you're trading your account based off of the account size that you have, 50 to 100 pips should get you your target for your daily goal every single time, right? So if I got a $500 account and I'm trying to get 5% of my account every single day, I should be shooting for 50 pips, right? 50 pips, because 50 pips is $50, right? That's my goal, right? I'm probably adding that wrong. So that's $25. I'm sorry. So I should be shooting for 100 pips, right? So if I get 100 pips out of this trade and I got a $500 account and my goal is to get 5%, then I should be closing my trade out once I hit my 100 pip goal, right? If I get anything else, that should just be extra for me, because once you get to the point where, all right, I've hit my daily goal, you need to take at least half of your trade out every single time. And like, other people may tell you something different. Other people may say, you're supposed to hit all of these different targets. But for me, I recommend people that's trying to grow their account is always be in the money. Always be in the money. And the only way you can always be in the money is you always paying yourself. Like, don't get in the trade and go up 50 pips, 100 pips in profit, and then you're not taking a partial. Because these targets are these targets are just, you know, just random lines and random levels on the chart. Nothing about your trade says that it has to go all the way down to 37.84 if you got in here at 38.13. Even if it got all the momentum in the world, there's nothing that says that I'm supposed to hit the target that's right here, the target that's right here, or the target that would have been right here. There's nothing that said that I'm supposed to hit these targets. But what it does say that if I get right here, I need to take some money. If it get right here, I need to take some money. If it gets right here, I need to take some money. And once this happens, I should be at least 100 some plus pips up. Whatever else happens after that, that's just what I get to take home as an extra. Because at this point, for sure, you should have met your daily goal right here altogether, right? If you have a daily goal that hasn't been met with 100 plus pips or 100 pips, that means you're trading too much for your account size. And if you try to do this all the time, you're going to start seeing that you're going to lose more because you'll give up this amount of pips or this amount of pips because you wanted to get this amount of pips, and then it'll reverse on you. And now you just let all the money go that you had in profit.
Okay.
Got it?
Yes, I got it. Thank you.
Okay. 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 Let me see. Okay. Let's see. That, Nicole, that same thing goes. Getting out of trades and profit before pullbacks, it's the same process. So if we were taking the break of this low at 37.98, you taking partials all the way along the way. If you taking partials all the way along the way, all the way down, by the time you get a pullback, your stop loss should already be in profit. And if it does so happen to pull you out of the trade, by the time it pulls you out of the trade, your stop loss should be in profit. And if it does pull you out, you should be in profit, and you should have already taken off a partials of that trade. If you're somebody that can't take partials, that means you need to set a certain amount of pips that you need to get. Like, all right, if I get in this trade and all I got is a 0.01, then I need to say, all right, 50 is good, or 100 is good, or 150 is good. And that needs to be what I get out of the trade. And if I want to get any more out of the trade, I need to put my stop loss deep in profit. So that way, if it does just so happen to reverse on me, at least I got this amount of pips before it went all the way back up. Got it?
Yeah, I got it.
Okay.
So Corey,
yep.
I'm in this trade, this SPX.
Uh-huh.
And it's in the negative. It's supposed to be, I'm in it for a sale.
Right, right.
Yeah. So, and it's just planned.
Yeah. I'm gonna be honest with y'all. I mean, I think it's gonna drop. I think it's gonna drop, but I actually don't think it's gonna drop until we get to like get into this area between
Until
20.
it goes way up there. Oh my God.
That's what I want to actually happen, not to be like wishing that y'all lose y'all trade or nothing like that. But I don't want y'all to lose y'all trade, but I'm looking for it uh to come back up to about 20. Let me show y'all something. Here's some extra sauce. So, you know, all of these guys trade based off of the same thing, right? They trade together, right? And what you notice is NAS made a higher low, US 30 made a higher low, but guess who has it? SPX, right? Also, notice this. There is liquidity on this candle that's still not taken. There was liquidity on this candle that was taken off of US 30, right? On NAS, that's on US 30, right? There's liquidity on SPX in this candle, right? On US 30 took his liquidity. SPX took some of his liquidity. Both of them took some of their liquidity. But look who has it. The NAS 100 hasn't grabbed any liquidity from here or from here. So because of that, which also lines up to what happened today, right? Where it looked like it was going to drop really, really hard, and then it rejected and pushed back up, right? So before it drops, I'm looking for it to come, for NAS to come back up and grab the liquidity it left behind, which is around here or around here. And then I'm looking for US 30 and SPX to follow. And it left some liquidity right around here that it's going to come back up, push up, reject, and then drop. Come back up, push up in this area, then drop. Come back up, push up to here or to here, and then drop. Another thing that's been happening is because US 30 and SPX and NAS and all these other ones, right? If you look at this from higher time frame, right? Look at this, right? Look how small these candles are as the price just moves up, right? And the reason why you need to notice that, you can look at it on a weekly, it's just churning, right? But from this low to this high, no pullback on the weekly. On the daily, this low to this high, no pullback for real, right? But it's still going up, right? Same thing on US 30. This looked the same way. Let me reset this. Let's look at US 30. So it's on the daily. From this point, we got a low. We've had no lower high. And then we just been churning up like real ugly, right? Just all these small candles. but no real candles, right? So I think I sent this to a couple people a couple days ago when I noticed this, but what they're doing to us right now is there isn't really any catalyst for the market to keep going up other than the Feds pumping money into the market, right? Because we're honestly, we got bad numbers all across the board. Coronavirus up, job numbers are low, unemployment increasing. Like there's actually no real reason for the market to still be going up. So why are we still getting new highs? Because we know all this, right? We retail traders. We retail traders, and there's hedge funds that's not like proven, right? But they got a lot of money, right? So for us, this looks like an obvious area to sell, right? We should have sold. We should be selling. We should be selling. We got this huge wick rejection. We got this move down, this move down, this move down, this move down, this move down. They actually know that we see this as a perfect time to sell. Guess what they're doing? As we're trying to sell, they're buying up our orders. And that's what's pushing the market up. Every time we get in here and we like, oh, it's about to sell, it's about to sell. All they doing is buying it up at a lower price. Oh, it's about to sell, oh, it's about to sell. Buying it up at a lower price. Oh, it's about to sell, it's about to sell. Buying it up. It's about to sell, buying it up, right? And they just keep using our sell orders to continue to push up. Let me show you guys another thing.
Corey, how do you keep yourself from being caught up in that then?
I mean, you gotta trade with the machine. Trade with the machine. It's called trading with the machine, man. Like, ain't no way not to get caught up in it. You just gotta pick a side and choose. And then if you always getting into the direction that they trying to go into, if your bias is to buy with them, then you'll be fine. Like sell, sure, take your sales, but you should always be looking for a buy in this type of time frame, right? I want to show y'all some other stuff. This is like high-end knowledge right here, right? But this is called a COT report. And this report gives you the number of commercial, which is in the red, retail, I think that's the green. I want to make sure. Yeah, green is retail. And then the blue is hedge funds. So the red is commercial. The red is institutional. The red is the institutional market, right? So those are the people who are really driving the price, right? The hedge funds are, let me make sure. I don't remember which one is it right now for some reason. Commercial. Yeah, commercial is
red.
Commercial is red. And then the hedge funds are green. No. Yeah, I was right the first time. Let's see.
You too. Huh?
Yeah. Yeah. So green is retail, red is institutional, and blue is large banks and large hedge funds, right? This over the past 3 months, right? So over the past 3 months, where has the bias been for since November the bias for the institutions have been to the buyer side, right? The bias for the retail and the hedge funds have been to the sell side, which was selling it off right here. And then we flipped and started to try to buy over here, along right here. But while we're buying, they're offloading. They're offloading right here. Like every time you see that this pushes up, they're just letting off orders, adding on, letting off orders, adding on, right? Let me see if we can go deeper. No, we can't do it. We can't do it. But you remember how I told y'all, like, where we think we should be selling, right? Right. Like once we got up to here, we thought we should be selling, but look at what the commercials did. They still buying. They are still buying right here, right? Here in November, they added on 50-some thousand orders. In December, they added on another 72,000 orders. This portion of December, they added on another 100,000. Then they added on another 116,000 right here. So they're buying right here. And you see what we doing, the hedge funds, the smaller hedge funds and the retail traders, we steady trying to sell. And all they doing, buying it up right here. And look, we were negative. We were selling 15,000 and you multiply this number by 100. So this is really, there were 156,000 orders right here by us retail. And then there were 376,000 by hedge funds. They bought those up right here with those 500,000. So they bought all the ones that we placed and the hedge funds placed, and then they added on some as well, right? Same thing right here, 76, 74, so that's 746,000. They matched that, right? They matched our 230,000 plus the 474,000. They matched that with a 70,000 or $700,000 orders placed. They matched that, and guess what we did? We kept going up. Same thing right here. Million orders right here in this week. What was here? 425,000.
Ready to sell.
571,000. They matched our near a million orders and put another 2 on top of it. Put another on top of it. They did it again, another million orders. We had 300,000 plus 790,000. That's another million. They matched it again. What are we doing? We still going up. The market was kind of off because this was Christmas time frame. Guess what? Guess what the commercials did, the institutions did. They ain't do nothing. They was off. They weren't even doing nothing around here. But guess what they did? They tricked us into thinking that they were going negative, they were going short. So they put in 100,000 something sale orders to make us think that we were about to finally get that drop that we were about to do. And then this doesn't get released this week, but guess what they did? They already matched us. They already matched us, right? Because guess what? We just going up more. This gets reported at the end of each week, so we don't have this number yet. We can get this. I can pull this up from another source, but they already matched us because we still going up. So wherever the report comes out, we're gonna probably be somewhere. We're gonna get a level somewhere above this, So let me see.
Corey, where did you go to learn all this stuff?
I don't never stop learning. I never stop learning, man.
Great.
I never ever stop learning. So this call was
Or
C.
I need 25% of it.
It's
This
like
called
I think I kept on
COT report.
That's what I need. I'm good.
This called COT report, right? And this will give you the institutional orders right here. So here's the Dow Jones average, right? Open interest, long, non-commercial. This is us. This is the retail, hedge funds, all that kind of stuff. This was the week ending January 5th. This was commercial. This is long versus short, right? And then this is non-reported. I don't know what that means because you don't really need it, right? But what you do is you compare what these numbers are to where these numbers are, right? They matched us. We went 24,000 long, 36,000 short. So we're negative. We're in a bearish position. They went 38,000 long, 32,000 short. They're bearish. They're buying our orders. They put in enough orders long to cover all of these over here. They took enough sell orders to force the implication that we should be going short right here. And they put in those sell orders to fake us out so they can buy. So they could buy all of these 24,000 and add on the rest of this 14,000 that they added on right here. So
Corey, how we put all of this together?
all of this comes together by considering the longer picture. Like all of this stuff right here that I'm talking about right now, you need to look at this from higher time frame. Like when you get in trying to figure out like, okay, how am I going to trade this week, right? I need to say, okay, what's going on with the commercials? What's going on with non-commercial? You comparing this data. Like this is the same information that I showed you on this chart. It's the same thing. It's just this is in the graphical, and then that is in just those are the hard numbers. These numbers are a little off because this is getting this from, I don't know where they sourcing this, but what I just showed you is the actual CTO report or COT report. So, like I just kind of went off on a tangent, but like this is
Corey, are those the institutional moves that we see?
exactly.
Okay, I got you.
Exactly. These are the moves. This
Got
is
you.
when you say there's an imbalance, that's what
That's what
those
it
orders
is.
are.
When they're got you. Okay.
That's what those orders are. When you say that there is a imbalance that needs to get filled, that's because they placed the order on this candle and they filled it over here on these candles over here. They placed this order to drop this down right here. So where you thought it was going to sell off, they were coming off of a selling, they were coming off of selling terms, off of bearish terms. And they saw this to get us to think that they were going to continue to sell it, just so they could turn bullish right here and keep going up. Just so they could turn us bullish right here. So where we thought this was going to go and keep selling off around this area for this particular couple of weeks or months, or this week or month right here, they turned it on us and sent us bullish right here. They used this to drop and this to trick us. And then right here, they turn bullish. Right here.
But Corey, I get this, right? But in all this, you're in the market, right?
Mm-hmm.
And this took place.
Mm-hmm.
But you cannot read these type of things to capture it before it to say you're gonna be on the side of these persons too, you know?
Nah.
You catch the move.
You're not watching this while you're trading.
No, that's what I'm saying. So
nah, you're not watching this while you're trading. What you're doing with this is this is what you do on the weekend. This is your weekend homework. This is what you do Saturday, Sunday, when you're trying to figure out what you're gonna do for the rest of the week. That's when you're using this, right? You're not going in and like, I'm gonna look at this in the morning and I'm gonna say, oh, I'm gonna buy because that commercial did it. Because for one, this information is only released at the end of the week. This is released every Friday at 3 p.m. in the afternoon.
So being that it's released every Friday, wouldn't it change by the time the first session open?
No. Nope.
Corey didn't tell you guys or tell us that we're not supposed to win. But we're winning anyways.
But that's the thing. But Corey, my question is again, we get this on say this report comes on a Friday and you're gonna read it on the weekend.
Mm-hmm.
Does that gives you a reflection of what the next week will be?
Mm-hmm. Yep. Like if we go back to it, okay, right? So these numbers don't give us a lot because this is still dealing with holiday time frame.
Right.
We got the numbers released for last Friday, so all of this is kind of off. But when we get the numbers for this Friday, we'll see what are they doing. Are they still bullish, or are they switching to bearish? The commercials. We'll know that because they'll start stacking levels right over here. So if they're bullish, still we should get an order above zero. Series of orders above zero.
And so our goal is to trade with them.
Yep. That is the goal all the time. Trade with them, not with the retail traders, because most of the time.
And them are the banks?
Those are the banks. We want to trade with the banks.
Is that why there's something called order flow? Like when you have that
that's what this
blue and
is.
yellow?
This is order flow.
Okay.
Brain hurt.
Yep. So and this is again, let me answer the rest of the questions and then I'll come back to that. So I think we only got Gabriel left. I don't even know if Gabriel's still on. You still on, bro?
You talking about me or my daddy?
I'm here.
Oh, okay, your dad. Okay. Where can I find a chart with the lot sizes from different brokers? Still needing help with MetaTrader on the computer. I'm not sure what you're referring to, but I can give you something that'll help you with lot sizes.
Listen, I think tonight Oren Wright is doing a training on how to set up MetaTrader 4 on your computer
Yeah,
in
Oren,
IML at about 9, I think.
yeah, Oren does like a lot of this stuff I'm teaching y'all. I got it from him.
So
Oren is one of my favorite instructors,
you
man.
could check him out. Trust me,
You definitely should check Oren out.
guy is a saucy guy.
Yeah,
What's his name? Oren who?
Oren Wright.
Yeah.
Okay. I was just about to ask you who we should be watching on a live session to kind of learn
Yeah,
more
Is
about
he
this.
out of the hospital? I thought he was sick.
I don't know if he is or not.
No, he's out. He's out. But
Most certainly he can't teach a
yeah,
class.
he was very bad. He was sick for sure.
Let me screenshot this for y'all.
But you could always go on his
Actually,
recorded
Really?
sessions.
just screenshot this picture right here. Screenshot this. This will help you with understanding lots. And then the only thing different on here is your indices are going to be based off of the broker. So if you have a broker like FX Choice, 0.01 is the minimum you can trade with. If you have, and it's the minimum you can trade with a broker like FX Choice, and that equals 10 cents per pip. If you have a broker like Hugo's Way, 0.01 is the same as a 0.1, and it would be $1 per pip. And when everybody says, Hugo's Way pays out more or, more than FX Choice, they're actually wrong. Because if you want to take the same amount, you would just use a 0.01 versus a 0.1.
But if FX Choice won't allow you to, the leverage is much lower, so you can't take as more than you can chew.
That's actually a good thing.
Exactly.
You shouldn't be trading with the 0.1 if your account size can't hold it. Plus, if you trade with a 0.1, if you're trading with a 0.1 on FX Choice and versus trading with a 0.01 on Hugo's Way, FX Choice, you can take a partial. On Hugo's Way, you can't take a partial. So you should actually, you want to have that. You don't look at that as a bad thing. You want to be able to break up your orders so you can do like I told y'all before.
Yeah, I was gonna say that with Bitcoin and US 30. I
Yeah.
mean, I usually do 0.01 and there's no way to take a partial there.
Yeah, you want that. Okay. So that was Gabriel. Wanted to ask about reading trading books and they can confuse you to lose.
Corey, quick question.
Mhm.
So the lot sizes, like I have Ospreys, is the same as FX Choice.
It's a
The
mix.
first, what's that?
So it's a mix. So if you trade in SPX, it's the same as FX Choice. If you trade in any of the other Forex pairs, it's the same. If you're trading US 30, it's like Hugo's Way.
But like the question is, the first number is the cents, correct?
What do you mean the cent?
Like if you're doing a 0.01, the 01 is cents.
For US 30 on Osprey, you said on Hugo's Way, right?
No, on Ospreys. I have Ospreys.
Oh, it's gonna be $1 per pip on US 30.
Oh, okay. So
But
indices is going to be different from FX pairs.
on FX Choice, it's the same. All the indices are you can trade with a 0.01 and it'll still equal the same 10 cents per pip. And if you want to trade with a 0.01 equivalent to what Hugo's way is, you would just use a 0.1 and it'll be $1 per pip for every $1,000.
Okay, so cents, dollars, and then $10. The 1.0 is $10, right?
Right, right.
Okay. All right. I got
Yep.
it now.
Yep. Except so if you're using like Hugo's way Osprey for US 30, a 1.0 is going to be $100 per pip. Got me?
Got
That's
it.
that's just for that broker. If you want $10 per pip on Hugo's way or COT 4X, you're going to be trading with a 0.1. Again,
Blow your account quickly though, innit?
exactly. So I
But
would suggest that.
I made quite a lot of money with, but obviously I caught a trend, so I made a lot of money with Hugo's way. But last week I tried to trade Bitcoin on a 0.1,
Mm-hmm.
and yeah, man, it kind of like it was a lot, you know.
That's a lot of money.
It's a lot of money, man.
A lot of
Took
money.
me out quick, man. I'm not gonna lie.
Yeah, you don't want to do that too often.
Yeah, I think I'm gonna like stick to FX choice for now.
Yeah.
For all of that.
I
But yeah,
always would.
regarding to the question about the books, Corey, obviously there's loads of trading books I've realized on different strategy, like not strategies, trends and stuff like that,
Mhm.
Fibonacci. But there's
Mhm.
obviously so many different traders that have written these books.
Mhm.
So obviously, from what we've learned, do you think it can confuse me with all the, reading these books, or from what we've learned so far? Or do you think it is going to be good to have that extra knowledge on different Duke? That's what I was asking.
Well, I mean, there's always going to be a bit of confusion just reading the books. There's going to be terms you never heard, terms that are used interchangeable. There's going to be new material. There's going to be old material that they teach a different way. You
Yeah,
know, there's always going to be something that's going to throw you off, right?
right.
Your
Yeah,
best teacher,
yeah,
honestly, your best teacher is, read the books, but get on the charts. Like,
yeah,
you should be back testing more than you trading, right?
yeah.
You should be marking up charts more than you're actually entering trades. Like, I read books, like, let me show you guys. Turn on my camera.
It's like practicing like a football player.
Yep.
He's practicing more on the training ground, which
Hmm.
is our back testing and stuff, than actual trading. The
Yeah.
trading should be the match, right?
Hmm. Yep.
The game.
So I don't know if y'all can see. Let me see.
Corey, I was reading a book and I gotta go look for it, but it said something that you might have said before. It say train your eye to the obvious, magnify it, and then build off of it.
Hmm.
And
Hmm.
that's the same as back testing, but see what's obvious to you when you start back testing, and then as it become apparent with all the education we're getting, your eyes start to see it,
Yeah.
and everybody's pace is different. So don't look at me, don't look at you, don't look at her, do you.
Hmm. And I like that point you made, because your eyes are gonna navigate or gravitate to certain things that my eyes won't, because I naturally can see fibs. You naturally may see bearish flags or bullish flags. So that may be something that you focus on because that's what your eyes naturally see, right?
Right.
I have a lot of books, but the ones that are giving me the most value, they don't actually have anything to do with actually what goes on the charts, like trading in the zone. Like, that book gave me more value than anything. Everything else I just learned from back testing, from watching videos, from just digging in and researching.
Yeah.
Um,
Okay.
Naked Forex, that taught me a lot. Um, Candlestick Bible, that taught me a lot because I mean they're essentially saying a lot of the same stuff, you know. But I mean, you can win with any strategy, you know, if
Mm.
you can consistently apply it, you can win with any strategy. So I can win as a break and retest trader. I can win as a smart money trader. I can win as a flag trader, a scalper, or a swing trader. As long as I'm applying it consistently the same way, then I'll be a winning trader. You know, I can be profitable. But at the end of the day, if you can't consistently apply the stuff you have picked up, then it don't matter what book you read. It don't matter what video you watch, you know, because you won't be consistent. And to me, it's more important for you to focus on like handling mindset, managing your trades. Like like I said, you should be back testing to the point where everything you see on the chart, you've seen it before. You've seen uh what a bull flag look like. You've seen what a break and retest look like. You've seen what a double top look like and how it reacts and when you should get in because you gone back through the charts and found it and looked at it over and over and over and over and over and over again. Like this replay tool should be your best friend. Like this should be your best friend. And I know you if you got the free account on TradingView, you can only replay a certain amount, but you know, like it's do it as far as you can, you know, because the candlestick's the same, you know. If I was going back to what a break and retest look like, I'm just gonna mark this off, gonna hit the replay. It broke right there, right?
Right.
I'm gonna zoom in and I'm like, okay, what does a break and retest look like? I'm gonna hit play. It broke right there. Okay, cool. It broke. That was a break. It came back, it rejected. All right. I wouldn't have got in right there. Right. I want to know what a reversal look like, how to trade a reversal. I'm gonna go do the same thing over here. What does
There's a
it look?
W there, isn't it? Double
Huh?
bottom.
Huh? I want to know what this reversal look like. Just gonna come in here and watch it. Rejection. All right. I saw it reject. Is this gonna hold? Would this be something I would enter on? Right? This gave me a clear sign that it reject. Right? So now that I see I got a rejection right here, rejection, 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 starting to push down. Do I enter this trade on the next candle? Yes, I do. And I would have been in profit. I would have been in profit.
So
Where
could
is
I
that?
enter that, yeah?
Yep. You could have entered this trade. You
That
would have
wick
hit
there
profit.
as well, yeah.
You could have got in anywhere up here and you would have been
For the
fine.
sell, yeah.
Okay. Then where would I put my stop loss? Okay, cool. I could have used area, this area, this area.
Right. And what's that indicator? You're the stochastic or something. What's that indicator?
This,
Yeah.
I don't even really use this. I just have it on there. I don't know why,
Oh,
but it's called a squeeze indicator, and it's
okay.
basically similar to the MACD. I don't
Oh,
know why I leave it on there, but I mean, sometimes it's good. because you can get like a little picture of the momentum at the time.
Yeah.
But
Okay.
I don't know why I leave it on there, but I really don't use it.
Okay.
But this replay is your friend. This
Yeah.
this will teach you everything you need to know. If you want to look and be a reversal trader, if you want to be an institutional trader, all right, here's the imbalance right here. Imbalance that they left behind right here. We want to know what happens when we get an imbalance. Let's take a look. We got rejection. We got a candle that left imbalance. And we know it is because it's a bearish engulfing candle, right? How do we take this trade? If we didn't get in right here, we'll have another opportunity somewhere inside of this to take this trade. Sometimes it's the next candle. Sometimes it's days later. Sometimes it's hours later. All right, so let's see what happens. There's our entry right here.
Right.
All right, so does it continue to go down? Yep. Yep. That was our entry right here. Where do we
Okay.
trade it to? Till we get a higher low. That's where we trade it to. And we take
Okay.
partials along the way. We start getting a higher low. We start getting stability. And guess what it starts to do? It push up. We still got a little imbalance. Is this still valid? We can still see. You can see, right?
Mm.
Still have some more room down, right? Is this still valid? There's some imbalance that got left right here.
It's
Is
gonna
it
come
gonna
back to
hold
it.
this? Look at that. It's our entry inside of this imbalance. If we wanted to take another trade right here, and we would have got some pips out of that.
Yeah.
Would have got some pips. Even came back. Let's see if this hold. It did. We would have got a little drawdown, but we would have held. That would have stopped us out. But guess where it's coming back? This one right here.
It's coming for that one, yeah.
It just came for that one. It gave us some profit and gave us a higher low right here. That sold off of this area right here. So the next one is right here. Does it want to take this?
The equal high, isn't it? There.
Yep. You see why though? Because it's this one. And it left this alone.
Imbalance. Yeah.
So the next time we get a lower high, it should happen around here somewhere. It should happen around here.
So what? I can see that you know institutional trading and you know the way Kim trades as well. So do you do you combine your analysis? Because that's what I'm trying to start doing. But sometimes I get a bit confused. It gets a bit confused on my chart because I do institutional sniper entry. Then I'm trying to look for trends. Then I'm looking for Fibonacci retracements, all of that stuff. Do you know what I'm saying?
A lot of times Kim has the bias down pat. You kind of use the institutional concept to get your entries, right?
Yeah.
So instead of me taking the break up here, I would have been trying to get in down here.
Okay.
And there's certain things where I would have used to get in down here, and then I would just add on right here. So a lot of times you guys may be taking the break and retest right here, right? But for me, this isn't a time of day when I would have probably traded this, because this isn't the time of day that I would have traded, right?
Right.
So Over here, though, this is 9 a.m. This is the time of the trade that I trade, 10 a.m.
So you would have took that entry, you think? You would
This
have
would
took
have been
that.
my entry right down here somewhere.
That's probably 50% of that candle there.
It
Probably.
is. Another thing that
It's a
dang,
sniper
man, y'all
entry.
trying to get all my brain, man. Y'all trying to get all my brain.
You've been on vacation, man.
It's good, man. You're giving us the sauce.
When
Was this
you
session
see,
recorded, Corey?
huh?
Was this session recorded?
Yeah, it's recorded.
Okay.
When you see an impulse candle, measure that thing. Just this one candle, right?
Yeah.
Put your heels on here and stretch it. Tell me, what do you have right here? That's your entry.
Yeah, that's it.
You got a lot of liquid.
That's your entry. And also, all right, we measure this. We got an impulse. This is our stop loss below the zero. If it comes back down, push up, wicks us. We should expect it to reject around 3.8, between the 618 and 382 area. This
Right.
will be where I get my sniper entry from right here. So I can let it come down. I try to aim for as little drawdown as I can. So I would let it come all the way down, market execution, or put a buy stop above. Once I
Right.
see price get down here, I'm gonna put a buy stop right here, and I'll just let it pull me in.
Okay.
And then guess where your target is? Your target is one of these levels where however we go, like we went all the way down here, my target would have been here at this rejection. If it kept going, I'm here. But guess what? I'm already partialing out. I'm
Right.
already partialing out because I already know. Same way over here. If I look at this wick rejection right here,
Right.
wick rejection, let's zoom in. This is like super sauce. Like I don't even think I thought this before. But like,
Exactly, this was my question actually.
so you let this candle happen, right?
Yeah.
This candle, you just throw your fibs on there, measure it, or you'll get used to it, eyeball it, right?
Yeah.
There's your entry off of this candle. And you know you got it when you see that this candle open up and it starts to push up. Let it push up into the kill zone, and then you either mark it or you sell stop below and get thrown in. If you miss this candle, which is okay, because that just means you get to have extra confidence by taking this one.
That one. Okay.
Kill zone.
And then you just get back into it.
You let it open up, push up. You see it's rejecting right here.
Priceless.
You let it wick. You either mark it or you buy, sell stop below, and now you get pulled into this.
That's it.
You want to see this happen on either, like I just showed you, a candle that's wick rejecting, or a candle that's either bearish engulfing or bullish engulfing. You will see the same thing.
Over and over, isn't it?
And Corey,
You
are
can
you always
go,
looking at the 1 hour or or do you go to 4 hour to look for that too?
I prefer 4 hour. I prefer the 1 hour. I don't go anything lower than that. And I ain't gonna lie, I have done it before. I've gone as low as the 5 minute to do this. But I mean, sometimes those fake outs. What happened
Hey,
here?
quick question, Corey. I seen that last wick that you wrote it on, the fib. He said to get it on that bullish candle. Like, what if, like, I try to do it in real time. Let's say that bullish, that bearish candle wasn't there. How would you know to mark the fibs on that wick, that big doji candle?
This one or this one?
The one to the right that you had it on a second ago. The one in the middle that made the high.
Over here.
Yeah. Say those candles weren't there after that. How would you mark up the fibs for that, knowing that those candles weren't there?
So again, I'm trading in the bias of the market, right? So I'm already looking for the sell. So what I'm doing is I'm waiting until I get a candle that's showing wick rejection, right? So initially, actually, this probably would have been the first candle that I tried this on over here. This one right here. Because what happened was this gave us a series of lower highs right here. And then I would have drawn it right here. But what would have ended up happening is when this opened up from here, it dropped, but then it pushed up and it kept going. So I wouldn't have entered in right there. I would have waited. I'm not entering on this candle. I'm entering, waiting for this candle to give me what I'm looking for before I enter, right? And then once I see that I get this move, I get a higher low, right? And it's a huge wick rejection, right? So that's my light bulb moment, right? To say, all right, cool.
Your kill
Throw this
zone.
on.
My bad. So you just mentioned that one doji itself, as if those candles weren't there, is what you're saying, right?
Yeah, I'm not, this what it's gonna look like for me. It's gonna look like this for me. That candle gonna happen. Hold on. Hang on. This what it's gonna look like for me. This candle is gonna happen right here. And I see I got heavy wick rejection, right? I'm gonna let this candle open up. And you see when it opened up, if you understand the candle, right? The first thing that it did when it opened up was, because it's bearish, right? This was the opening. It immediately pushed up, right? So I want to see that the price do that because I want to see inside of this wick that I get a rejection to the downside. So I want to see, when I see the candle open up, I want to see that it starts to immediately push up. And if I see that, I know it's trading into the area where it's already shown that it's going to sell. And
Yeah, I see that, bro.
then I can be confident in taking this trade. If I don't get that, I know that this left an imbalance, right? So that's when I can be like, all right, cool. I missed this part.
Yeah.
So let me come down.
And it's gonna come back for that zone.
See where it's gonna come back to. Right over here. You probably, and a lot of times what'll happen is you'll get a move that comes up to the 618. That'll be a fake move, right? You'll get a move that comes up to the 50%. That'll be a fake move because you'll see it on the lower time frames. Like just like this, it came up and you thought it was going to reject at the 618, but it dropped, then came right back up. It's got to get these levels. It's got to get to 382. It's got to get to 50. And it's got to get 382 or 618, depending on how you put it. All right, it's got to get it. Over here, similar situation, right? This is my SPX chart, right? Look what happened right here. This made the low right here, and then this impulse. I wouldn't necessarily use this because this was news pushing this down. But once I got this push up, again, I thought I mean, like this probably isn't the best example, but it did happen right here because I honestly thought this was gonna sell off from right here. But even still, bullish impulse, rejection. If I measure this,
It was your kill zone, yeah? Sniper entry right there.
right here,
Gee. Well, you caught that, yeah?
then right here. So this is off of the 4 hour. This is one that was off of 1 hour. This was off of the 4 hour. So I know, and just like now that I see this, right?
Yeah.
And if this does sell off, guess where it's gonna come to? Right back in this area or in this area.
So that's your target.
In this area. These are my targets.
Okay.
Targets.
See that.
And I'm hoping that I didn't just miss this. Ah, shit. Sorry. Because I'm actually waiting on this to get filled right here. Which I hope I didn't just miss.
Do you think it's gonna go all the way up to that high?
It pretty much has. I don't think it's going to the high, but
24.
Yeah, I hope I didn't just miss this.
It's in the zone.
It's in the zone right now.
It's already got it. But I want to believe that there's still, because it hasn't got all of it, I want to believe there's still a little more, put one last push that it's got to make.
Even though if it doesn't go up there, yeah, and you feel like you missed it, would you not get into that trade still or not really? Because it's still gonna push down.
Then I would take a break and retest setup.
Okay.
That's how you mix it all in.
Yeah. Okay.
You wouldn't do just a sell limit?
Yeah, I have sell limits in here. I have sell limits around here at 23 already sitting, but it missed it. So I still don't know. I gotta look and see. Let me look and see something. So right now, like I told you guys before, what's steering this right now is NAS. And NAS on the 4 hour made a higher low. US 30 made a higher low. SPX hasn't made a higher low, but it's rejecting around the same time frame. So right now, I know there's an imbalance that's in here.
Yeah.
As long as this will hold this area, it should push back up. It should push back up. Because right now, same situation going on right here, where it's trying to grab this from here to push it back up. But if NAS doesn't reject this higher low, then it's gonna fail and it's gonna keep dropping. So I'm hoping that what I would like to see is that this doesn't go any lower over here. And if it does go lower, I need it to stop right here. And if it stops right here, I need to see a wick rejection to push it back up to the 13050 or 13100 area. Because if it does that, then I'll get my sniper entry with the limit order. But I really meant to put it in at 3820. And if I had to put it at 3820, I would have been in already.
Right. Okay.
Yeah, I meant to put it in at 3820. But it's all good. I'll just trade the break of this area.
Okay.
Um, yeah, see, we came right up to it. But the only reason why I didn't just take it from here was because if you see this didn't really give me any like clear rejection. So that's why I think it still got some potential to go up.
Right. Okay.
And let me see if we look at the 3 hour. See, that looks like it might reject. 2 hour, looking like it's pushing down. These lows need to hold. But this is good for y'all though. That's in this trade because
What's that you use there? What is that?
this
Yeah, you know that thing that you just used. What is that? With
which
the
one?
green lines and stuff like that. Is that your high or low?
This
Lower high. Yeah, you know those lines there. Yeah, what is all that level there?
these are yeah. This the higher low, lower high.
Oh, it comes with that lower high, higher
Yeah,
low thing. Okay.
yeah, yeah. This comes with that. But yeah,
Lot of sauce, Corey, man.
A
yeah.
lot of sauce.
Listen, you don't have to answer my question tonight. I'll save it for the next session.
What is it?
Yeah, Corey knows a lot, man.
Do I
Man,
recommend any books on fibs? Solid transition. I honestly have never read a book on fibs. Everything I know is from YouTube, from Oren, from just back testing, uh, from a couple of other different people. But everything that I know, that's where I came from.
Corey,
Yes.
um, there's an indicator or something, I don't remember, that it tells you how many pips a pair moves a day.
Mm,
Do you know what I'm talking about? There's an indicator or an app or there's something where you can figure out how many pips a pair moves a day.
nah, I don't know. I just kind of take an average of that. I don't know.
Okay. All right. Thank you.
Um,
AD.
last
oh yeah,
question.
the average daily something, right?
Average daily range. Yeah, yeah, yeah. I heard of that.
Oh,
Yeah,
okay. Thank you. I'm writing it down. Thank you. Average daily
yeah,
range.
that's right. Okay, last question. My question is more mental. How do you push yourself to stay up watching trade while you still have to work? How do you not beat yourself up?
Corey, how long have you been trading for, bro?
Altogether, 5.
5 years.
Mhm.
That's quite long, man.
Yeah,
Yeah, so you look at kind of similar to the Go Live educators, man. Should be a Go Live educator by
I don't want to. How do you not beat yourself up when your trade doesn't go the way you analyze it? How do you stop it? If the trade doesn't go Like right now, I'm missing this trade. Like right now, it's dropping from where I wanted it to drop. I'm missing it. So all up, I just when that happens, I already know where it's potentially going. So if it either I take the break and I take the wherever I think it's gonna go, or I just wait for the buy and buy it back in the opposite direction. And like if you know where, if you have a not even predicting what's going to happen, but if you have a good idea of what's going on, then you don't really worry about missing a trade or losing a trade, right? Because if you understand the charts, you know where the market potentially trying to go. And if you don't know, then that's where you start to be like, oh, I gotta get in, I gotta revenge trade, I gotta get my money back. If you lose a trade, right,
Sound like me right now, bro.
yeah, because that's where you kind of start to chase and all that kind of stuff. And I mean, you never get over it. It's times when I get in early and I lose a trade. I'll show you an area where I lost last week. Where was that? Over here. And I shouldn't have been trading anyway because I was in Brazil trying to trade with some bad internet and I had been out. So I was just using a real tight stop loss and a bunch of other stuff, right? So this area, I was looking for the sell based off of this candle.
Oh, you were trying to sell from there, yeah?
Yep.
And the market pushed up.
And I'm gonna tell you exactly what happened. I did the same thing. And I was trying to be
That's an
sneaky.
institutional candle there.
I was
That's
trying
what
to
they
be
do.
sneaky. Yep.
They take out retail holders, traders, where they think they're gonna sell, and then they push it back down.
I was being sneaky, not actually use this blue candle. I take that back. And I got in on this red candle.
Okay.
And I was using a tight stop loss. I think my stop loss was right here because I was at that point, I was already thinking like I was good because it had already started to drop right here. So I used a stop loss that was like right here. And I got in around here. It dropped right here. Before I can even adjust to it, it shot up and whipped me out.
Shot up and took you out.
Yeah. It shot up and took me out. And I didn't even have a chance to react to it. But
did you get in? Did you get in when you saw that candle? Did you get in like for the sell after, or you would leave that?
Nah, you know what? I didn't even get in. I just took the L because this is not even a time when I usually trade anyway. And I was like, you know what? I punished myself. I was like, I shouldn't have been doing this anyway. So I need to take this L as a reminder not to do something stupid. So, and then you see it's still, if I had stayed in my trade, I think I got in there like 32. Got in at 32 and it went all the way up to 44. Had I stayed in there or waited,
that would have been only what 30. How many pips you would have been in drawdown, even if it went all the way up there? It was a
If I had
tight short.
had my stop loss a little
Yeah,
higher,
yeah, 20. If you had the 20 pip stop loss, you would have been in that move still, wasn't it?
yeah, if I had had the stop loss the right place, or I waited, then
Yeah.
I wouldn't have had
Oh
it,
yeah, you could have got a better. Yeah.
and I would have been able to get 300 off of this.
300 pips. Jeez.
350 right there,
Yeah, that would have been nice.
or at least to here 260.
Yeah. Yeah, that's still good, man.
But
I didn't.
but the hardest thing is sitting on your hands. That's the hardest thing in the world.
I find that very hard as well, man, for sure.
I ain't gonna lie, y'all. I had a bad week last week. Like, I just shouldn't have been trading because I was traveling too much.
Was it?
And the internet was bad, and I got tore up because I kept trying to sell this. I tried to sell it here. I sold it here. I'll tell you what else I did. So that was the sale I tried to take. I tried to take this sale, but I tried to be cute and get in at the top of this wick. And I tried this. And you see what they did? They pushed it above here.
Pushed it up again and then done the same thing again, isn't it?
Yep. I was trying to be cute with a little tight little stop loss, and they took me out for no reason, and then it dropped 300
back down.
Trying to be cute. And if I had to just waited, a lot of what I was doing last week was I was being real impatient. And I think I was just being impatient because, I was already out. I was trying to hurry up and get done trading, being cute, and I missed this drop.
Right.
That I could have put off this candle, and I could have even got this, and I still missed it.
Moral of the story: don't be cute.
Don't be cute.
That's it.
So,
Or you don't do mental stop loss?
I mean, I do, but I was being cute. I put in a regular stop loss. When you get good, you be trying to do cute stuff sometimes.
But Corey, you know something? It's easy to put a mental stop loss. I'm gonna say it's easy to put a mental stop loss if you're at the height, because you never know when that impulse or that bank move gonna wick you out. And they move so fast when they do that.
Yeah. I was being cute. I was like, man, I know I'm gonna use 40. I was trying to go for this. It literally, my target was right here, and it wicked it and turned around, right? And I was trying to look at this tool right here, where this show you what your risk reward ratio is. And I was like, yeah, man, I'm about to get a 30 to 1 trade, 33 to 1 trade, or 5 to 1 trade, right? Where this is my reward, this is my 1.
Yeah, 1 to 5, innit? Yeah, 1 to 5.
Yeah, I'm like, I'm about to go today with a 10 to 1, and close out, And I did that, and I was like, yeah, I'm gonna be good.
Yeah, you see, like with these indices, when you're using that risk to reward, you see it's down there. It says, look, 103,370, right? So how many points? I mean, pips what does that say, really?
This is 315.
315. So you look on that side, yeah, okay.
Yeah, 315.
Yeah, 350. Because gold is like that as well, isn't it? You have to look at that on gold.
Mm-hmm. Yeah.
315 pips.
Yeah.
You're trying to get some change.
I was trying to be cute, Miss Tate. I was trying to be cute.
Nah, he nearly caught it though, innit? Nearly.
I was trying to catch the tippy tops.
Yeah.
And if I had just waited, I would have got it 3 candles later. I would have got
Oh,
it. And would have been able to flip it and take the opposite direction.
yeah, for sure.
But I got toe up, and now it's just a talking point. So,
That's pretty cool.
so
So,
now,
Carl, when you do something like that, do you just stop for the day and say, you know what, I'm not going to trade for the rest of the day?
if
Like,
I
what's
lose two
your
trades,
process?
if I lose 2 trades in one day, I stop.
2 trades one day. Got it.
Not a scratch though. Like if I scratch is a scratch. That ain't nothing. Like to me, a scratch is if I lose like 0 to 20, that's a scratch. Pips. If I lose 0 to 20 pips, that's a scratch. And that's up or down. Like if I lose 20 pips or if I win 20 pips, that's just a scratch to me. But if I lose 2 trades and I mean hit stop loss, I'll usually stop for that day. Sometimes depending on like where I am in the week, I may keep trading. Like if it's early in the week, I might keep trading. And that just depends on how the market moves. But if it's late in the week, Wednesday, Thursday, Friday, end of the day, Wednesday, Thursday, Friday, and I'm already near my goal for the week, or I'm nowhere near my goal for the week, I don't trade it anymore. I just let it go.
Thank you.
Mm-hmm.
Thanks a lot, man. Definitely a lot of value in this session, brother. Nice one.
3 hours.
Sorry, I have a question.
Mhm.
When do you usually trade?
I typically trade between 7 a.m. Eastern and 12.
Okay, thank you.
Sometimes I'll trade London, um,
Mm-hmm.
but I usually never trade Tokyo, Sydney, unless it's just like something crazy that's going on.
Gotcha. Okay.
You need to take a trade
Thank
during
you.
that time. But mostly during that time, I'm usually on here with y'all or my team or, doing, chilling with my wife or, you know, we need trade adjusted to FTMO. Same thing. So I trade FTMO too. And it's the same thing. I trade the same thing, like same situation.
Not to not to labor this thing, but I was told FTMO is harder.
It is.
It's harder and it challenges you more. So
Yeah, it is. I mean, honestly, it makes you stick to rules.
yeah, that's what I felt.
It makes you stick to rules. And
I'm not ready for it.
I mean, if you're a good trader and you're a good trader and you just don't have capital, I would definitely recommend it for you. Like if you're trading consistently and you just don't have the money, but you know how to trade and it's been proven you know how to trade, I would definitely recommend it.
Nah, I'm a good quarry signal taker.
Nah, I think you good, Tom. I know you good, actually. I know you good. I know people who passed it that's just been taking my signals, Cam signals. And as long as they like following the rules, sticking to the plan, like it's really like a testament of your discipline. So yeah, I think you would be fine. But yeah, man. I think that was all the questions. I'm gonna go ahead and drop these questions in chat. I mean, not in the chat, but on the description. Non-farm payroll news creates. Yep, it does. That is here. And then I'm gonna go ahead.